All right, good morning, guys. It's Friday. Looks like a lot of people are taking the day off or maybe walking in right at the last minute. Totally cool. Let's relax for a second, right? Good morning, Bobby T. Let's get our brains right. We're not waiting for a trade, right? Nobody's sitting around waiting for a trade. Everybody's sitting around waiting for rules to be met. Let's let that be the mantra today as you wait for the perfect setup, right? As you wait for all of those advantages, guys, write it on a piece of paper in front of you. Two choices in life when you're a day trader. Either your rules are met or they're not. Pretty simple. Takes all the stress out, guys. I hate having to be smart. I just want to be consistent. So that's what we're going to do today. Same thing we always do. Good morning, Bobby, Alex, D, Alan. It's good to see you guys here. Um, as usual, I woke up thinking about you guys. How do we make it easier? How do we make it better? Um, we make it easier and better by making it less, if that makes sense. Simplicity. If you reduce something on the stove, the flavors concentrate. It doesn't have to be more to be better. Sometimes it can be less. So we're going to keep that spirit in mind today. Um, as we begin, I'm looking at the names in here. It looks like we have a lot of the usual suspects. I always appreciate that. Um, newer people, excuse me. Beg your pardon, guys. Newer people, this is your class. And guys, the one thing that I posted at the beginning here um, is post your pictures or questions. It's so important that you participate in this classroom. And I really find that the people that participate the most tend to end up where they want to be. And I think that if you look back on your journey, if you've been with us for a while, the more you post, the more information you get back. But remember, guys, when you post, it's not always good news, right? Good morning, Gary. My job is to talk about what you've done, how you followed your rules, how you've embraced advantages, or maybe how you've let them go. So really grab hold of that student's mentality. Just come into every day like a kid, kindergarten, ready to learn. And what you'll find is the information becomes easier to absorb. Let's do what we always do, right? Because I think that routines are important. Keeping things, order of operations, maybe it just appeases my brain. I like to go to Forex Factory every morning, guys. When my charts are loading up, this is my first stop. Um, and maybe you've done it, maybe you haven't. There's nothing worse than opening your charts and going, oh my gosh, that's a rules met trade. And you enter that trade and then it just blows you out of the water and you're like, you know what? I probably should have checked news. I've done it once or twice, so I never even look at my charts until I've looked at news. Today is Friday, May 19th. All day are the G7 meetings. It's day one of the G7 meetings. That rarely does much. Got some FOMC members speaking today, 8:45, 9 a.m. Those have gone on. Low impact. And then there's that guy Powell, and when he talks, things move. Or they certainly have the potential to, guys. So at 11 a.m. today, we have what's considered high impact news. High impact news is news that may move the market. It may make it bounce, jump, become a little bit unpredictable, untradeable. Sometimes just the speed alone makes it difficult to get in and out of the market. So high impact news for me is an opportunity to sit on my hands and do nothing. It costs me nothing to do nothing. So that's kind of what I'm doing. Medium impact, I'm the same way. I prefer not to be there if there's that big a potential for an emotional response. I have zero concern for what the news is. I'm not worried about what they're saying, what it affects, but what I am concerned about is just recognizing that it may make the market difficult to trade. So today at 11 a.m., put it on a piece of paper, ask Siri to give you a reminder at 10:55. This is a great opportunity for us to just sit on our hands, and we'll see how other people react to it. And then we're going to come into the education side, guys. For those of you that have never been with me, our first hour is dedicated to rules. Our first hour is dedicated really to the highest probability trend trade that Nexgen teaches, embracing advantages, recognizing advantages, and then committing to those advantages. But I like to remind people, and this isn't just for the new guys, this is for y'all that are sitting on the sidelines, that are saying to yourself, man, I'm just not getting where I want to be, but I don't really want to post in class because what if I'm wrong? Guys, be wrong. Um, I'm wrong every day. Hell, I've been married 25 years. I've been wrong every day for 25 years. But if you post your trades in class, guys, that's the first step to getting to where you want to be as a confident trader. Post your trades in class, track them in a spreadsheet, guys. It's a two-part process to get things moving in your direction. The more you post, the more feedback you get. I'm live 5 days a week, 3 hours a day. That's 15 hours every week. You have access to a live instructor. 15 hours a week that you can ask questions. 15 hours a week that you can share pictures and receive feedback on everything that you see and everything that you do. It seems silly to me, right? If your kid needed help in school, you'd get them a tutor, right? And then if they didn't take advantage of the tutor, you'd probably be upset with them. Guys, take advantage of the tutor. Today we're going to learn the trigger lines and the Fibonacci rules for when it's okay to trade. We're going to talk about the rules. We're also going to talk about the advantages that the rules provide. Everything that you do when you take a trade, it should provide a statistical advantage. It should be a methodology, a set of rules that have been proven to win more than they lose. And that proof comes through your study, through your back testing, through your simulation of the trades daily, posting those pictures in class, getting the feedback, making sure that you're taking the correct trades, and really focus on not taking the wrong trades. Don't put yourself in that position to build muscle memory towards things that aren't providing a level of success for you. Guys, we're going to talk about simplicity today. We're going to focus on one trade initially. We're going to discuss a second trade. Hey, good morning, Marshall. But what I find and what has been proven over the years with the Nexgen students is that successful traders, when you look at their plans, they take the same trade over and over. They're not looking for more trades. They're not trying to catch every move in the market. But what they're doing is they're looking for the opportunity to enter the market when there's enough advantages that their likelihood of success outweighs their likelihood of being unsuccessful. And that's what we're going to talk about today, that simplicity. And you've got to learn the looks so that they're easy. It's imperative that you do that. You should be able to analyze your charts inside of 4 or 5 seconds after the first, I would say, 30 days. And you will recognize those advantages almost instantaneously. Guys, you have the opportunity to use market replay. I encourage people to do this every day. Go back and fix your mistakes. Replay the day. Take the trades that you skipped, skip the trades that you shouldn't have taken. Maybe you're working on a management plan. Market replay allows you to do that. But the best thing about market replay, guys, is if you have what you believe is a trade setting up, you can pause the market. You can literally stop the market in its tracks. You can look at your rules. You can look at your checklist. You can make sure that they're met, and then you can proceed with that trade or you can cancel that order. And the idea is market replay doesn't just help you build good habits. Market replay, because of that ability to pause, is going to allow you to see the potential of that plan when executed properly. And that's what I really like about market replay, because if I go through and I pause and I make sure that every trade I take fits the rules, and I made $1,500 that day, and then I look at my actual day and I only made 300, it shows me that I have this room for improvement. And it really shows me what that potential is when I learn to follow the plan. And for me, it motivates me to commit to that plan. Take pictures of the correct trades on market replay. Guys, Mondays in this classroom should be ridiculously flooded with pictures from your weekend study. You don't have to be taking a live market trade to get feedback. Guys, if you do 7 hours of market replay this weekend and you take 100 pictures, I want you to pick 10 or 15 of them that you have questions on. Don't just flood me with pictures to show off, but let's turn them into lessons. If there's something that you need, whether it's management, entries, whatever, bring those in. Let's talk about them. And then just repeat. Rinse and repeat. Rinse and repeat, guys, every day until you're always taking the correct trades, because the correct trades have been proven to win more than they lose. you are guaranteeing yourself that you can win money, that you can win. And then you go off and you start testing that plan in one of those prop firms. You start looking at Apex or EarnTrader or TopStep or any of those ones that are going to allow you to control $100,000 worth of their money for minimal risk, to pass their combine, to prove that your plan is in fact in place, and doing what you need it to do. And then even more so, doing it with the pressure of being live. So guys, that's your path. Is there a way to sync all windows together so when you click forward? Yeah, so Finman, they are all synced together. Are you talking about 8 or 7? Just so that I know. Market replay on NinjaTrader 8 or on NinjaTrader 7? So on 8, Finman, what I do is I download my data, I get the day set, and then I open up the workspace associated with it. And all 3 charts will move in sync. If your charts are not moving in sync, Finman, it looks like one of them lags or drags. You may have accidentally bumped one of them out of sync. And if I bump this to the right, maybe I get excited and I go like this, I'll never see that live market until I hit this arrow, and then it brings me to that most current bar. But typically market replay, if I've got 2 charts, 3 charts, 8 charts, they're all going to move 100% in sync. But I don't click forward. And maybe that's what it is. Are you trying to fast forward and only one is moving? Because when I hit that fast forward button, all of my charts sync the same. Are you trying to look at different markets at the same time on market replay maybe? No? Just all the windows. I would make sure that if there's a capital F in the upper corner, make sure that it's clicked. That'll keep it where you can see it. And then if there's an arrow up here as well, click it and let it run. But I've never seen them not run at the same time, which is odd for me. Oh, no, there's no. Okay, thank you. That clarifies. No, it's just like in the real one. If I scroll back like this, I still have to scroll back like this. I don't think there is a way to make the scrolling process go through, just because they are different charts, right? They're different charts, they're different windows, they're different time frames. So while it's the same data coming through, no, that's not a silly question at all. That was a great question. Because what if there was a way and you never asked? Well, then you wouldn't know. But now you know that you don't have to struggle trying to make that happen. So sorry, that's probably not the answer that you wanted. But the cool thing is now you know. So, and knowing's half the battle, isn't it? That's what they say. Awesome. Got it. Yeah, we're all kind of bound to that one, I'm afraid. So guys, we're going to talk about a high probability trend trade today. This is our first hour. This is the first hour of every class. The same hour of every class is almost exactly the same, guys. And it is reinforcing rules, talking about the advantages they provide, where to find them, and then what they look like. So we're going to take words and turn them into pictures, and then we're going to take those pictures and we're going to look at the live market. We're going to look at your pictures beginning the second, third hour, and we're going to tie it all together and try to create this understanding through repetition. And this highest probability trend trade, guys, it means that all of your indicators on every chart agree for a trade. Your triggers are going to be the strongest. There's going to be absolutely nothing in the way. And you're going to be able to identify where the market's likely to continue, and you're going to be able to use that point so accurately that you'll have a limit order waiting on the market to come to you. And these 3 rules for a high probability trend trade create 3 advantages. And advantages make the world go round, guys. I can't stress this enough. And a trade, essentially, is nothing more than putting 3 advantages together. A trade is momentum, it's a clear path, and it's an entry area. And these 3 advantages are provided by 3 rules. And guys, these 3 simple rules come about on a 13-2 chart and a 5-1 chart. Only 2 charts, only 3 rules, a high probability trade that typically wins 70 to 80% of the time. What an amazing foundation to grow from, right? And that's exactly what we're going to do. We're going to grow from a foundation. We're going to create such a solid base of knowledge that your trading can expand from it should you choose to. Or if you're super patient, this may be the only trade you ever take because you like winning more than you lose. So guys, the 13-2 chart sets the tone. The 13-2 chart is what gets everything in motion. And it's a broad stroke of a brush. It's giving you that overall temperature of the market. And guys, Discord just kicked me out, so I'm going to get back in real quick. I know that you can hear me. It's spooky, right? It's from the great beyond. I hear them, but I can't see them. All right, guys. Let me get back on stage. Here I go, here I go, here I go. All right, guys, do we have audio again? Can you hear me? Yep. Cool, cool. All right, that is the secret spies from the market trying to shut me down so you guys won't be so darn successful. But we're gonna fight them, right? Guys, everything starts on the 13-2. Write that on a piece of paper. Everything starts on the 13-2, guys. The 13-2 is going to determine the overall trend of the market. If we're looking for a high probability trend trade, it only makes sense that we're trading with the trend, right? If the background is green, we're in an uptrend. If the background is red, we're in a downtrend, guys. Looking for rules to take a high probability trend trade in the direction of the trend. That's the first advantage that you give yourself. And then rule number 1 is met on the 13-2 chart. Rule number 2 is met on the 13-2 chart, guys. 2 out of 3 rules have to be true before you ever turn your attention to the 5-1. And this is challenging for some people because if your first 2 rules have to be met before you take an entry, well, then that means that you could literally look at one chart for most of the day until those rules are met. But when they are met, when you have the advantage of momentum, when you have the advantage of a clear path, you're going to be able to turn your attention to a smaller, faster chart, guys. It's a refinement process. You're going to refine that broad stroke of a brush, and you're going to be able to pinpoint with really amazing accuracy where the market is likely to continue, and you're going to wait for it to get to that point with a limit order, and you're going to buy or sell a pullback at an area inside of favorable large triggers. And guys, this refinement process, I've got pictures for everything. We do this because your 13-2 chart moves slow. Your 13-2 chart is like the semi slow rolling down the highway. And when it gives you those strong triggers, that rule number 1, when it gives you no termination conditions, that rule number 2, what happens in this one bar providing all that information happens in 15 to 30 bars on a smaller, faster chart. And we're just going to use this as a refinement process. You're going to be able to take these advantages and whittle them down to a small area on a faster chart. And by doing so, it's going to allow you to reduce your risk. It's going to allow you to maximize your profit potential. And that's really what we're going to do, guys. We're going to focus on only 2 charts. Going to embrace the idea that you only need 3 rules. Avoid the temptation to create more rules. I get them all the time. Okay, the 13-2 needs strong trigger lines, but let's talk about the colors. Let's talk about this. Let's talk about that. Just let it be what it is, guys. Momentum and a clear path in an entry area are going to get you into the market. It's going to happen on 2 charts, and we're going to figure out what those look like right now. So I'm going to go to the education page, guys. This is the tutorial section. And man, throw some props to John Novak. This looks amazing, doesn't it? He has been working tirelessly for the last few days to make this education page look amazing, to make sure that we are up to date, looking modern, all that good stuff. And guys, your 3 rules for the high probability trend trade are all defined right here on this page, and it starts with the trigger lines. Guys, we're chart readers. 90% of what you do during the day is going to be chart reading. 10%, yes, Gary, the volume has rolled, so that July contract of crude should be where you're at now. Guys, we're chart readers, and the chart reading begins with the trigger lines, and the trigger lines are going to establish rule number 1. And rule number 1 says strong triggers. Guys, there are very verbose ways to say rule number 1, but let's keep it simple, right? Rule number 1 says strong triggers. What's a strong trigger? You're going to be able to recognize this in about 3 seconds and commit it to memory in about 8, guys. In an uptrend, when your background is green, strong triggers means that your small triggers, these solid lines, are above your large triggers, these dashed lines. Super simple, right? Guys, if this were, I'm going to take a picture of a picture because we're going to draw a little bit today. Guys, if this were a pair of scissors, these scissors are ready to cut, right? It's the space created between the small and the large that lets you know that the odds are favorable for the market to continue in the direction of the trend. And guys, you see the same thing, whoops, in a downtrend. Like scissors open, ready to cut. And once again, it's this space between the two, between the small and the large, that lets me know that the odds are favorable for the market to continue in the direction of the trend, guys. You're going to hear odds favorable momentum all the time in class. You're going to see it annotated, OFM. And guys, when you have odds favorable momentum on your large chart, that's creating a scenario, the absolute best scenario for looking for a pullback to Fibonacci support or resistance on a smaller, faster chart to take that high probability trend trade. And guys, when your triggers are their absolute strongest, this is your advantage of momentum. This is the one that sets the tone for each and every trade that you take. And I'm going to ask, are we good with this? Guys, if you're brand new, if you are new to the game, new to the software, if you are new to Nexgen, or even more importantly, guys, because this class isn't 100% focused on just new people. If you're working on consistency in your plan, if you're working on turning this around a little bit, getting more wins, less losses, embracing advantages, is everybody comfortable that the best of the best trades start with odds favorable momentum, that this strong trigger look should lead the way? I don't care what kind of trades you're taking, guys. Strong triggers create advantages. Give me a Y in the room if you're with me, guys. It's easy to recognize, right? Takes just a second. If I go to the live market and all I'm looking at is trigger lines, watch how simple this is. I click OK. Space between the two. There's one of those potential pullbacks, right? If I scroll back, not the best look, not the best look, but oh my gosh, it's absolutely perfect. The momentum is strong and that market does in fact continue up. There's one of those potential entries. Same thing going the other way, guys. When those triggers are separated, that market rarely turns direction. And what's the flip side of that? If odds favorable momentum is the absolute best look, guys, when those small triggers return, when those scissors close, this is a weakening of the large triggers. And when you weaken the large triggers, anything can happen up or down, guys. You're going to see that. Anything can happen triggers, odds favorable triggers. And when you go throughout the day and you look throughout the day, I like to share a lot of pictures, guys. This is your rule number 1 picture. This is about 6 hours. No, this is through the overnight. So this is 5 hours into one day and 5 hours previous, guys. Rule number 1, odds favorable momentum. Easy to recognize. Anything can happen triggers. Notice that anything can happen triggers happens right before the turn of the market, guys. you've lost the advantage of momentum. The market recognizes it, and it ultimately goes the other way. Odds favorable momentum, there it goes, ramping up to the upside. Anything can happen triggers. There's your turning point once again. Chances are there was Fibonacci resistance right there. Odds favorable momentum, and then the market goes into a transition phase where nothing agrees. Some triggers go up, some triggers go down, guys. It doesn't agree. You sit on your hands. You don't have to predict because rule number one has you waiting for the advantageous odds favorable momentum. So I like to share that picture. And this is your first rule, guys. This is the one that sets the tone. And then rule number two says no termination conditions, guys. Don't trade into an area that's likely to stop the market. Don't take away the advantage of a clear path. And what does that clear path look like, guys? Termination conditions are nothing more than areas with the potential to stop the market. They may reverse the market, and those areas are pretty simple. New users, this is your key to the map. This is your what am I looking at guide. But these are the areas that may stop the market, guys. There's divergence highs, divergence lows. These magenta lines, these cyan lines. Guys, it could be resistance, red resistance, blue support, yellow one-to-ones. All of these areas have the potential to stop the market. In order to recognize whether or not that potential is really present, guys, it's a two-part process. It's a simple two-part process. The first thing that happens is price reaches the area. These dynamic Renko bars are all red. They're all trending down. They're all moving, and then they come into contact with Fibonacci support. When price reaches any Fibonacci support, any Fibonacci resistance, you have to ask yourself where the trigger lines are. And if the trigger lines haven't broken through, if you reach support and all the trigger lines remain above support, guys, you've reached an area likely to stop the market. This is what we call a termination condition. This is the perfect definition of it. The area is not broken, and therefore there is no clear path. How do I know that I have a clear path, guys? When both my small triggers and my large triggers get to the other side of support, support is now broken. The area is broken. The path is clear. And guys, support begins to act as resistance. It's a simple process. Price reaches the area where the triggers, if the triggers haven't broken, you've reached a termination condition. If both small and the large break through the area is broken and you now have a clear path. So we're going to go look at a couple examples of it. But guys, in its most simple form, is everybody okay? Comfortable with the idea? Price reaches, where triggers. It's a two-part process. And you're going to see it throughout the day, over and over. Price reaches a divergence low. If all of the triggers remain above that divergence low, guys, this is a termination condition. This is an area that may stop the market. No more short trades. And I like to lead with this picture because this divergence low, this cyan line, this on its own is not a termination condition, guys. This is a pivot that's lost momentum, and it's nothing more. It's just a pivot that's lost momentum. When price reaches the area, the trigger lines remain above. Now we have a termination condition. And guys, this termination condition creates a full reversal of the market. So we reference this as a strong bottom, a termination condition that creates a full reversal, that provides you that odds favorable momentum coming from a low is what we call a strong bottom. Guys, if you see that same look from a high, we call that a strong top. A termination condition that creates a full reversal is what we call a strong top or a strong bottom. And I want to kind of illustrate that, guys. This is a termination condition. Price reaches resistance. Absolutely no trigger lines break through. In the moment, it's nothing more than a termination condition. When that same termination condition from a high creates the full reversal, now we have a strong top, guys. And the strong top behaves as an anchor for the absolute highest probability trend trade. The strong bottom behaves as an anchor for the absolute best high probability trend trade. When a termination condition creates that full reversal, when it gives you that odds favorable momentum, it supplies you that clear path. Guys, this is a trade that typically wins 70 to 80% of the time. This is your foundational trade. This is base camp. This is the one that's going to teach you to be a chart reader, to recognize these advantages. This is the one that's going to allow you to embrace them. And this is the one that's ultimately going to move you in the direction of maybe looking for more opportunities in the market. But termination conditions, the trend may end. Price reacts to Fibonacci, guys. A simple two-part process, and let's go to the live market. And here is a absolute textbook. Price reaches one-to-ones. Absolutely no trigger lines break through, guys. We know, even with odds favorable momentum, that we're not looking for short trades in the moment. And you can see the uptrend that it started. If we come back, we see it at support again. Price pulls back to support. Guys, 90% of what you do during the day is going to be reading your indicators. 10% is going to be taking advantage of it. Give me a Y in the room if you're with me, guys. This is about as easy as I think I can make it, but it's not going to be for everybody. So if you have a question, throw it out. If price reaches an area, not trigger lines, but if price reaches the area and the trigger lines remain below resistance, you've reached an area that may reverse the market. It may reverse it momentarily. It may reverse it for the rest of the day. Price reaches an area, absolutely no trigger lines. Guys, that's your best of the best. Look how often it happens at Fibonacci areas. Guys, you have such an advantage. Everyone's always saying, hey, buy low, sell high. Guys, you know exactly where low and high can be because you have Fibonacci, and now you just have to learn how to use it a little bit. So guys, two advantages in place so far. We have strong triggers on the 13-2, therefore you do have the advantage of momentum. You have no termination conditions, you have the advantage of a clear path on the 13-2, guys. Your large chart has done its job. It has set you up to look for an entry. But before we talk about that entry, sometimes the market may turn when it's not at a Fibonacci area. Sometimes the market may overrun areas. Sometimes the market may not get to the areas. Guys, this next termination condition, you're going to see on your 5-1 chart first. You're going to see on a smaller, faster chart. And it's going to help you identify that change before you're able to see it on the broad stroke of the brush. And that termination condition is 3 divergence in the same location. 3 divergences in the same price range. It may terminate the trend. You'll note that we use the word may because there are no guarantees, but it removes your advantage of a clear path. 3 divergences means that the market's lost momentum 3 times in a row, right in the same price range. It may terminate the trend, and it becomes even more powerful when the 3rd divergence happens with the small triggers inside of the large triggers. That anything can happen look. So 3 on its own, termination, right? Add those weak triggers, and it becomes more powerful. And guys, it's more powerful still when that 3rd divergence is higher than the 2nd. It's a head and shoulders pattern. It means that price couldn't exceed the previous pivot, and we lost momentum that 3rd time. Guys, you're going to see this look on a low or this look on a high on your 5-1 chart when maybe this is the scenario on your 13-2. You're not going to see that change happening rapidly on the 13-2, so those 3 divergences will help you identify those turns in the market. They're also going to become a very valuable tool for management as you learn to manage these great entries that we're working on. If you're in a trade and you recognize 3 divergences, it'll give you the opportunity to manage out. It'll let you preserve your capital, and it'll keep you on the right side of things. So the advantage of momentum is in place. The advantage of a clear path is in place. Guys, we're going to figure out how do I get in at that best of the best area. We're going to turn our attention to the 5-1, guys. You've made the decision that it's time to enter. Now let's find that entry. This will be the look of your 5-1. If my 13-2 is in an uptrend, if it's screaming to the upside, there's nothing in the way, my 5-1 is going to kind of mirror that. All the bars are up, right? The smalls are above the large. I have strong triggers. I'm in an uptrend. My large triggers, my synthetic triggers, guys, large triggers are the smooth. Synthetic are the ones that look stepped. They're both large triggers. Synthetic simply means that it's coming from a different time frame, guys. These synthetic triggers on your 5-1 are your 13-2 large triggers. And when they work together harmoniously, overlapped one on top of the other, guys, we call this favorable large triggers. And favorable large triggers are going to give you the smallest window of opportunity for entry. It's going to consolidate that point where the market is most likely to continue, and it's going to give you the best risk, the lowest risk, and it's going to also provide you the best chance for profit potential, because you're really laser focused on this one area where the market is likely to continue. And that area is going to be Fibonacci support or Fibonacci resistance. It may be yellow 1-to-1s or a mid band. So you're going to focus your attention when the rules are met on the 13-2 on the areas, fibs, mid bands, yellow 1-to-1s. And they need to be inside of favorable large triggers, guys. And you're going to be able to identify your window of opportunity based on that combination. The rules say that you're going to use a limit order, meaning you're going to wait for the market to come to you. So in order for the market to come to you for that area for entry, we need the beginning of a pullback. We need a small little retracement in price that is counter to the underlying trend. Everything says up. On your smaller, faster chart, that refinement chart, you're waiting for a reversal bar. That's that first red bar that happens after all those green bars. And at the time of the reversal bar, guys, this is where the magic happens. You're going to be able to pinpoint where the market is likely to continue. And you're going to do that by creating a window of opportunity. Your window of opportunity for a long trade extends from the highest point of support, this mid band, to the lowest point of support, these yellow 1-to-1s, inside of favorable large triggers, inside of large and synthetic overlap trending together, coming up like a shark about to breach. Guys, trigger lines are moving averages. As this market pulls back, these trigger lines are moving up. So if you have a mid band, a tick or two above, if you have support, a tick or two above, the odds are there that they will be enveloped inside of those large triggers. And if the market pulls back and it gets to that highest point inside of favorable large triggers, right where your limit order should be waiting. Guys, you're in a long trade. You're in a long trade with the recipe met, right? You're in that long trade and the advantages are in place. You had strong trigger lines on the 13-2. Therefore, you had the advantage of momentum. You had no termination conditions on the 13-2, and therefore the advantage of a clear path is present. So you turned your attention to the 5-1, and you used a limit order at an area inside of favorable large triggers. You now have the advantage of an entry area, that point where the market is likely to continue. Your initial stop, your protective stop, is going to go outside of that window of opportunity, below those large triggers where the market shouldn't go. If the market extends beyond that area, those 1-to-1s inside of favorable large triggers, guys, you don't want to be in the trade anymore. You no longer have that third advantage. But this is a trade that I'm taking 1,000 out of 1,000 times, guys. I have a plan that says never miss it, because 70 to 80% of the time, that highest probability trend trade that happens after a termination condition on the 13-2, this is a trade that typically wins 70 to 80% of the time. This is a trade that Nexgen users tell me they typically win 80 to 90% of the time. But guys, I'd rather say 70, because we're going to make mistakes every now and then, right? When this market begins to move in the direction of the trend and in the direction of my trade, I can reduce risk below a reversal bar because I waited for the market to come back to an area inside of favorable large triggers. My risk is reduced. because I extended the distance between entry and my next Fibonacci level, I have expanded the profit potential. Guys, this is your best of the best. Your first 20 days with Nexgen, 20 trading days, first 30 days, let's say your first month, doesn't matter how you say it, your first 30 days, excuse me, should be focused on entries, guys. Focus on finding the best of the best spot, recognizing those areas inside of favorable large triggers, and then just studying this look until it becomes easy. And what you're going to find is that you're going to develop trust over the course of the first 30 days. You're going to be able to identify odds favorable momentum almost instantly. If you embrace the simple recipe, price reaches an area where the trigger lines, termination conditions should take you 3 to 4 days of a little bit of study to really feel comfortable about what you're seeing. And then these entries, you're going to have them inside of a week, guys. You're going to know where you need to get in, and you're going to start training your brain to trust the process. And it never wavers, right? A reversal bar prints. Identify the areas inside of favorable large triggers, and that's the point where the market is likely to continue. That's your entry point for the highest probability trend trade. You'll notice on this one, guys, there's blue support outside of the trigger lines. That's not in my window. This is not an area where the market is likely to continue. It's this one spot from the highest point of support to the lowest point of support, which means that as that market comes back, this is my entry at the top of the window. I have to be mentally prepared that it may go to the bottom of the window, right? And if something wins 70% of the time, I have to be mentally prepared that it may extend beyond that window and hit my stop, in which case I know that I had every advantage and I'm simply going to wait for the next opportunity. Focus on the execution for the first 20 days. Focus on the best entries. Focus on getting in at the correct spot. And it's going to make learning to manage these trades so much easier, guys. And here's kind of a two-chart picture. Odds favorable momentum on the 13-2, smalls above the large are wide, they're angled in the direction of the trend. Everything tells me that the market is likely to continue in the direction of the trade, or the direction of the trend. You'll also notice on the 13-2 that there are no termination conditions, because if I embrace the process, price must reach an area. It has not. We have not reached a divergence high. We have not reached one-to-ones, nor have we reached resistance, guys. No termination conditions present. Rules 1 and 2 have been met on my 13-2 chart, which means that I turn my attention to the 5-1. And when this reversal bar prints, guys, use your drawing tool if you need to. From the highest point of the triggers to the lowest point of the triggers, and then you can squeeze that box, or you can use another one from that highest point of support to the lowest point of support. All you have to do is activate a limit order right at the top of that window. And this is your highest probability trend trade. Your initial stop goes where the market shouldn't, outside of that window. When that reversal bar prints, you can reduce your risk. Guys, you can study this look over the weekend and be so confident by Monday that you will be catching high probability trend trades. And here's your study using those tails, those potential entries. And let's see if crude provides one. We're looking for odds favorable, right? Guys, I'm going to take everything off of this, and let's only look for odds favorable, and we'll assume that every trade has a clear path because we're only focused on entries. Smalls below the large are wide, they're angled in the direction of the trend. If I circle this tail and scroll back on my 5-1, I'm looking for this tail to line up with an area of resistance inside of favorable large triggers. Guys, this is about 4 ticks short. May not have been a trade for you, but you can see the process. What happens in this one bar, odds favorable, nothing in the way. Look at the square on the 5-1. It's that refinement process. So if we scroll back again, and let's look for that best of the best trigger look, right? And I'm going to circle a tail. Guys, this is what I want you doing this weekend. And taking pictures of each and every one when the rules are met. What do we think? Small's above the large. The large are wide. They're angled in the direction of the trend. Rule number 1 has been met without question. Price has not reached an area, therefore there are no termination conditions. Guys, give me a Y in the room, please. I'm doing a lot of talking. It's your turn now. Give me a Y in the room if you're brand new. Give me a Y in the room if you're looking for consistency. That's all right. I love it. Alan, don't ever be afraid to participate. Guys, this is your best trigger look. Let's go through. Does this best trigger look? Ask yourself. After the reversal bar, does the market pull back to an area of support inside of those triggers? It does, right? Guys, this pattern repeats itself every market, every time frame, over and over and over. Folger, did you write your rules on the chart? Okay, then we'll be able to identify it easy, right? Guys, do me a favor. All you have to do when you circle that tail, when you get that information, I want you to take a picture. Folger, you don't need me to tell you, and I'm going to show you how when we look at it. Did we have odds favorable? Absolutely. No terms? Absolutely. Was there an area inside of favorable large triggers? Yes. Guys, this is a trade that typically wins 70 to 80%. This is a trade that provides all the advantages. And you'll notice that we circled a termination condition down here. Guys, your job is to take this picture, to write your rules on the chart, and to share it to screencast. Get it up to the cloud, just like Folger did in the room. Do you see that link that he just posted? This is your path to success. Take this picture, put it in the room, and show off a little bit. Mark, look at this awesome trade that I just took. If there's a challenge, we'll talk about it, but probably what I'm going to do is virtually high-five you and say, great job. Way to embrace the advantage of momentum, the advantage of a clear path, and the advantage of taking a trade where the market is likely to continue. Guys, your initial stop here would have had to go down here, right? Outside of those areas, inside of the favorable large triggers, but once it moves in the direction of the trade, that stop gets reduced. This is our plan, guys. Day in, day out, creating advantages each and every time. And there it is again, guys. Pulls right back to resistance, right there. And if we keep scrolling back, we're going to keep finding these opportunities. Your software is 10 days back. That means you have 10 days of opportunities to go find these pictures and take them, guys. You should be able to fill up at least 30 or 40 slots inside of your spreadsheet with that highest probability trend trade. Your first 20 days, guys, are entries. That's it. Finding the best entry, sharing it in class, getting the feedback, making sure that you're following rules. And every time you get one of those best of the best look, guys, take the picture. This is that same screencast link. I'm going to put it into my favorite looks so that I can come back and study each and every day. Perfect trend trade long. What's it look like? Well, if I click on it, it looks like odds favorable momentum, it looks like no termination conditions, and it looks like a pullback to the area. Guys, this is the trust part. This is becoming so focused on the perfect entry that you never miss it when the rules are met. New users, keep it mechanical at first, right? Don't worry about finding all the trades. Worry about finding the absolute best trade. I'm going to give you guys this right now. This is a high probability trend trade checklist, guys. This is your guide. These are the rules that you write on your chart. These are the rules that you're following, that you're embracing, that are providing these advantages that you need to have a trade that has been proven to win more than it loses. Because I'm kind of an overachiever, I'm going to give you another checklist, guys. And this checklist is the exact same thing. The rules don't change, but this one has pictures stolen, liberated, pilfered from the study materials. So not only does it remind you that you need odds favorable momentum, but it shows you exactly what it looks like. It talks about the advantages that it provides, and it tells you what you shouldn't be looking for. Same thing with termination conditions. Same thing with entries, guys. A couple shots of that window of opportunity. If you're brand new with me, or you're looking for that best of the best, that simplicity. Guys, get in there and get the best. Those are your checklists. And those checklists revolve around a plan, guys. And I rewrote the plan. And this is a simple plan for consistency. And I'm throwing this in the room for you guys. This is how you should write a plan. And I know that I've got some new people in here. Do this for me this weekend. Take this plan and make it yours, right? Keep it simple. 30 days. All you're looking for is the best of the best. Looking for that trend trade. Here's the conditions. Strong top or bottom. Momentum. Clear path. Entry area. And then here's two pictures showing exactly what those entries should look like. Management defined. If all I'm working on for 20 days is entries, guys, here's a very mechanical approach to management as you learn to read your charts. And then as you grow, guys, there's a 50-50 trade. For you new users that have never been with us, this is your first medium probability trade. Remember that the high probability trend trade, every indicator on every chart is going to agree for the trade, right? Every indicator says go, go, go. Every indicator is providing an advantage. The second trade most of you are going to take is a medium probability trade. And a medium probability trade is when most of the indicators on your charts line up for a trade. However, a small issue exists. A singular small issue exists. One thing is kind of ruining the party. Guys, this is ultimately going to be the vast majority of your trades. It's going to expand, but the key is when you're taking medium probability trades is you have to manage them assertively, which means that you have to recognize the trouble. You have to identify the issue. You're going to get to break even quickly. You may take profits a little sooner than you normally would. Medium probability trades require a different management plan because we're managing assertively than you'll have to use for a high probability trend trade. Your first medium probability trade, guys, is what we call a 50-50 trade, and I'm going to show you the picture. The high probability trend trade revolves around either the area is not broken and there is absolutely no trade, right? No triggers through the area, no clear path, no trade, or small and large are through the area, we have the clear path, and there's that tail, right? That potential entry. Guys, high probability is one or the other. There is no gray area. You either have a clear path or you don't. Your first medium probability trade, and guys, I'm telling you, you can make this one super easy and embrace it, or you can fudge it up 9 ways to Sunday. Your first medium probability trade revolves around areas with the potential to break but are not broken, which means that when my small triggers get above an area, my large triggers do not. 6980 right here has the potential to break. And why does it have the potential to break? Because the market has odds favorable momentum, guys. This is without a doubt, and I want you, I don't know, spray paint it on the wall in your office. Odds favorable momentum gives areas a chance to break, but this area is not broken yet. This area has the potential, therefore it's not a clear path, which means that this becomes your small issue, which means that if your issue is not having a clear path, then your entry had better be perfect, guys. And here's a picture of a 50-50 trade going to the downside. Smalls break through the area with odds favorable momentum. In order to take a 50-50 trade, guys, especially as a brand new user, and you may grow beyond this, but in the beginning, to give yourself the highest chance of success, you should have no divergence on your 5-1. There should be zero slowdown on that chart. Your window of opportunity should be small and concise so that you can reduce risk as much as possible. And guys, your trigger line should be odds favorable momentum. Small should be outside of the large. Here's one going to the upside. Guys, this will be your first medium probability trade. This is a trade that if this is your issue on a larger chart, there should be zero issues on your 5-1. The challenge is this look right here gets people excited, and they're not looking for the best of the best. So what I did is I created this simple plan, right? I wrote this out the other morning because I'm always thinking about you guys. And I added a 50-50 to it. 50-50 means that 50% of your trigger lines are through. Where's that? Oh, let me get a picture up here, just so that there's clarity. 50-50 does not reference your chances of success. 50-50 means that 50% of your trigger lines are through, 50% are not. That's it. Nothing more, nothing less. You could call this a straddle trade. You could call it one above, one below trade. Doesn't matter what you call it. It means that the area has the potential to break. So when you have a 50-50 trade, you still need odds favorable momentum. Guys, this is a 100% prerequisite, must have it, give you the best chance of success. You should have that exact same look on your 5-1 chart. There should be no divergence on your 5-1 chart. Guys, another checklist. It should be coming from a good top or bottom, guys. 50-50 trades that come from a strong top or a strong bottom have a better chance of survival. So as a brand new user, we're creating confidence through the memory of success. It only makes sense that we give ourselves the best chance. You will enter at the area, the same entry rules, right? If divergence prints, there is no trade. And then, guys, there's those same pictures I just posted in the room. But the management has to be different. As you grow into a medium probability trade, guys, if you get in, your initial stop is still outside of the window of opportunity. It's still moved above or below reversal bar. But now, if divergence prints, you should exit the trade. Because if you wouldn't enter with divergence, you shouldn't stay into the trade if it prints, right? Your first contract goes at that first trouble spot. Your first profit target is at the first trouble spot, and then you get to break even because we're managing assertively. Guys, if you start simple and you allow your management to be mechanical, you can add, you can embrace, and you can go a little bit further with that trading plan. Is everybody cool with that? Guys, take this trading plan, go through. I put pictures in here for an example. What's a short entry look like? Well, click on it. If you are truly going to take this plan and make this plan yours, do you know what you need to do this weekend? Where did it go? I want you to delete my pictures, right? And I want you to put 10 pictures of perfect entries long. And I want you to put 10 pictures of perfect entries short. And make that your plan. Make that your commitment, your best chance of success, right? And just focus on the entries. Make sure that the entries are solid. Is everybody cool with that? This is our first hour, guys. We made it through. It went pretty quick. We talk about advantages, and that's it. Highest probability, everything the way. And guys, this weekend, John Novak did a lot of work on this website. Go through, look at the language, see what it does. It's a different look, right? The verbiage has changed a little bit. If you're brand new, or H Piano, you're back. It's nice to see your name in here again. Go take a look at it. I need feedback, guys. Let me know if it's easier for you. Let me know if there's things that aren't clear so that we can do that. I rely on you guys for feedback to make us better teachers. Do that this weekend for me. Go take a look at it. It's absolutely beautiful. I love the colors. I like everything that he did about it. And it's really, really thorough, guys. The website's thorough. My class is simple. We're going to take all this great information and simplify. And now we're just going to go and we're going to watch the market, right? And we're going to see what it's doing, what it's saying, the advantages that are present. Look at this, guys. The larger up and the smaller up, but they're below resistance, and that's not odds favorable, is it? That's odds favorable. Do you see how rule number 1 isn't met? I stopped the process of looking for a trade. My rules aren't met. I'm not looking for a trade. It just doesn't matter to me what happens next. Guys, there's one of those 50-50 trades. Small's above the large are wide, they're angled in the direction of the trend. But the large hadn't broken through the area yet. And look at this, divergence prints. Divergence prints. Weak lifeless triggers and the market continues down. Another one of those 50-50s to the short side. Divergence prints. Another one that doesn't work. Simple rules keep you safe, guys. And that's the goal in the beginning, is to give you a foundation. to give you a foundation that you can learn, really that you can almost master inside of 20 days, inside of 20 trading days. And Safi, I agree, it's very easy on the eyes. Guys, if you allow this simple path to be yours for 20 days, I know that sounds like forever, right? You're going to understand how to read your charts fluently, guys. You're going to understand where the market is likely to continue and use that continuation point for an entry for a high probability trend trade. You're going to be able to recognize where the market is likely to stop, those termination conditions, and you're going to keep yourself safe from trying to take trades into areas with the potential to stop the market. And you're also going to begin to understand where the market is likely to go. And man, this is going to really help you as you develop a management plan using Fibonacci, using momentum, so that you can recognize targets. Perhaps you went short here, recognizing blue Fibonacci support as a target, right? If you went short up here, recognizing blue Fibonacci support as a target, you're going to have this understanding. And the idea is that you build a foundation, guys. You're building a foundation capable of winning consistently. If the highest probability trend trade wins 70 to 80% of the time, guys, inside of 20 days, you should be able to recognize this entry. You should be committed to taking it, and you can begin to create confidence through the memory of success. And then you begin to expand your knowledge. Then you start looking for other opportunities, or you look for ways to manage better. But it's imperative that you grow this knowledge base, this foundational base, and give yourself the best chance of success, guys. Everybody wants to be a day trader yesterday. It's going to take a little bit of work, right? You're going to have to post pictures in class, guys. You're going to have to toughen up and be willing to take a little bit of feedback, what you did well, what you did not so well. The advantages you embraced, the advantages you gave up, guys. Getting feedback so that every time you make a mistake, we can identify it and begin to correct the behavior together. You're going to track your trades. Every time you take a trade, it goes into this first sheet. What did you do? How did you feel? Were your conditions met? What was the result? And guys, you're going to take this trade. You're going to take that tracking. Where's my picture? Gosh, I have so many pictures. I try to start every day fresh. Guys, over 4,500 pictures. Try and catch me. Every morning, you're going to study the previous day's trades, guys. What worked for you? What didn't work? What felt easy? What kept you relaxed? What felt forced? What made you nervous? Guys, if I study everything that I did on Monday, Tuesday morning, I'm going to see what I did well. I'm going to see where I need help. And I'm going to have this clarity coming into Tuesday of what my plan of attack should be. Wednesday morning, I wake up and I study Monday and Tuesday. And I'm reinforcing these great rules. Guys, you will not eliminate mistakes in a day. But if you identify the mistakes over the course of 30 days, you will be absolutely floored how smart you are at the end of that 30 days. And it will accelerate the learning, guys. Use this spreadsheet. If you need help with the spreadsheet, if you need help putting links in, if you need help taking pictures, annotating charts, all you have to do is ask. I'm here for you. Alan's trading rules. I got to look at it. Alan created a PDF. Look at this. My trade is the high probability trend trade. This is what it takes to get me into the trade, right? Safia, take mine. There you go. There it is right there. Click on it, download it. You're so welcome. So guys, Alan's is a little more extensive, isn't it? I want you to look at my checklist. I'm a brand new user. I don't have any experience with the software. I'm not winning more than I lose. I'm focusing on 4 items best of the best, right? As you grow with the software, Alan, you have 1, 2, 3, 4, 5, 6 conditions for a high probability trend trade. I have 4. I really have 3, right? I don't worry about a 21-3 because, Alan, do you run synthetics on your 13-2? So check this out, Alan. You ready? Mind blown. See this big fat fib? That's a 21.3 fib. Guys, we use synthetics. And I don't know. And thank you for posting that, Alan, because guess what? I just had an epiphany, right? That happens sometimes. It's weird, but it does happen. So guys, the fibs come from different time frames when you put them on the 13.2. Your native 13.2 fibs extend all the way out. Your skinny little fibs that don't go to the right, these are from 5.1 charts, and these big fat fibs are the 21.3. So Alan, can't you use a 21.3? Can't you just use that fib on the 13.2 to know where your key areas are on the 21? Just throwing it out there. You may not. But that may be helpful, right? One less thing to think about. Keep it on the 13.2 for a high probability trend trade. Yeah, I probably don't need that one. And how about this? Are you ready? Oh, Alan, I'm not trying to beat up your plan. Please know that. But I believe in language very much. No termination condition expected to hold. How about no termination condition, period? Right? Why worry about expectations? Why not just embrace? If price reached the area and no trigger lines have broken through, no more. That's it. Rule number 2 is not met. Does that make sense? Expected to hold means that you get to form an opinion about those expectations rather than following the rules. Guys, these are the tricks that our brains play on us, right? From a good top or bottom on the 13.2 and the 21.3. That's a lot, Alan. Your 21.3 acts to the 13.2 the way the 13.2 acts to the 5.1, right? So unless you're looking for a high probability trend trade on your 13.2, there's too much that happens in one bar on a 21.3 to whittle it all the way down to the 13.2. You're going to get a lot of motion between the 13.2 and the 5.1 and very little on the 21.3. So stuff to think about. Keep it simple, right? Simplicity. Good top or bottom on the 13.2. And then here we say if the trade, and guys, this is, please, please, please send me your plans. I'll do this for each and every one of you. If the trade is taken, manage out with a loss of momentum or divergence when a good top or bottom is not true. How many divergences, right? What constitutes a loss of momentum? See how it's subjective, right? It could be one divergence, or is it the 3 divergences that create a termination condition? And this is management. Get it out of entries. Does that make sense? I love it. Guys, this is how you become successful. Alan, you're putting yourself on there. And then you have if a loss or managed out, use the 3 trigger rule for second chance when the 13 range market flow agrees. Oh my gosh, you're giving yourself so much information. What if the 13.2 no longer agrees? Will you still take the second chance because the 13 range agrees? If so, cool, that's great. And then for the second chance, a good top or bottom must be true. So I like it, but do you see how if you break it down, how much you have to think about to take one trade? Really? Alan, I've got a pretty simple rule for continuation trades. Is my 13.2, and maybe this will help, my 13.2 for a continuation trade, let's say hypothetically, strong triggers, no termination conditions, everything is up, right? And let's figure out where that happened. Right around here. Let's say you take a trade, it doesn't work. This has to remain strong and everything has to roll. And this is what I'm looking at. This better still be rules met for me to think about taking a continuation shot. And I want to say that the S&P had a look earlier today that kind of worked with that. If you look over here at 722, Alan, odds favorable, we got to no termination conditions. Obviously, the trend trade doesn't work, right? because the smalls haven't broken through. Everything rolls, everything lines up, and then there it is right there, that pullback continuation, because the rules are still met on the 13.2. Does that make sense? So this would be one of those ones as you develop a plan and you start talking about that continuation. Man, that's a good picture, right? This doesn't change. That's why I'm looking for that second chance. Let the 13.2 lead the way. Simplicity, simplicity, simplicity. And Alan, this is amazing. I love everything about it. You got your management, right? You've got your 50-50, what you're going to do with it. 50-50 trade with divergence. What's it going to take to get it? So I see reference to 5 different charts. It's a lot. Beautiful. Guys, this is how you get to where you want to be. You write out what you're going to do. And then, Alan, do you have pictures to support these rules being met? Because that's the second half, right? Is make sure you have quick reference to supporting those rules being met. I'm a fan, Alan. I think you could simplify. Because for me, if I can teach the highest probability trend trade in 3 rules on 2 charts, you may not need 5, right? You're getting 75% win rate? Yeah. Alan, I hate to admit it to the whole classroom. I'm not smart enough to look at 5 charts, because what I do is if my main charts say no, but one of those extra charts says yes, I take the trade. Because dag nabbit, I want to be busy, right? Guys, if you want to share your trading plan, and Alan, thank you. I hope that wasn't painful for you. I'm going to give you my email address. And I've had people do this in the past. And guys, I have offered this probably for the last year and a half. When you write a plan, send it to me. And guys, I'll pick it apart for simplicity, right? I'll try and get rid of the noise that might be confusing you. Or I may ask you a question, explain this to me, show me a picture of it. Because hell, I might get better because of it. But guys, you're always welcome. Send me your trading plans. Let me look at them. If you want feedback. And then, of course, if I give feedback, at least listen to it. You don't have to agree with it, and I respect your right to not agree with my feedback. That's okay, because we all see things differently. But you are cordially invited to do that. And man, look at it, guys. It's just, flat, small triggers. Yuck. There's one of those bad tops. Wonky. It's leaning lower, but it's not there yet. Just waiting for rules to be met, guys. And once they're met, it's time to pull the trigger. Holy smokes. Look at that. All the way down. Right to a termination condition. Pretty cool. Is that a bad top? It's just a product of society, Jose. It's not a bad top. It just doesn't know any better. Yeah. So what's a strong top? And let's just do it that way. A strong top's a termination condition that creates a full reversal, right? So the flip side, Jose's asking, is that a bad top? This was a bad top, right? This isn't a termination condition. This is just a push down. As we come back up, now we have that resistance. All the trigger lines are below. And guys, this is your fib update, your 10 o'clock. Right now it's a pivot, right? But it is a termination condition. But we're in a consolidation move. Do you see it? We came from a solid termination, and it pushes up to that bad top. It doesn't make that key area and comes right back to the midband. And then it pushes up again into resistance, and it comes back to the midband. And guys, do you notice how your triggers are ugly? That's not odds favorable momentum, is it? That's some wonky looking nonsense. Over here, man, your triggers are above the midband. They're below resistance. The smalls are up strong. That's just a pivot, right, Rain? That's all it is. Just a pivot. This is a termination condition here. That's textbook. That's price pulls up and the trigger lines don't follow. But we're waiting for things to sort out, guys. We're still waiting for odds favorable momentum. We're still waiting for a clear path. And we just don't have it. But do you guys see how, if you just pull it down, it's easy to make yourself believe that the market's trending. Do you see how if you just tighten it up a little bit, that's kind of a line in the sand, right? And look at how many times it's trying to come through here, this area of support. Do you see how it's just stuck? And it has been for the entire day. Give me a Y if you see that, guys. This is another advantage of Fibonacci. This is another way that Fibonacci keeps you on the right side of things. Can't we just say, let it break, right? Let it break. Get that clear path. And that's what the rules are designed for, guys. The rules are designed to help you identify advantages. And when those advantages are present, that's when it's time to trade. I'll leave you with the S&P. We'll see if it breaks out. Guys, I'm going to take a few minutes, go rest my breath, say good morning to my wife, all that good stuff. Post a picture. Guys, there's not a lot going on today, right? I need you to keep me busy. Post a picture, ask a question. If you're brand new in my room, guys, you know who you are. I don't want to call you out. But if you're brand new in my room, guys, I'm pretty sure you're wondering something. Put it in the room. If you're afraid that everyone's going to think you're silly, that you didn't know the answer to something that you're brand new at, change your username to like Bubba Joe Jack Jim. Something that just get an alias. Do whatever you have to do to feel comfortable posting. If you're a guy, change it to a lady's name. If you're a lady, change it to a guy's name. No one's ever going to know. No one's ever going to see you in the supermarket and go, oh my gosh, that's got to be Debbie W. Can you believe she took that trade last week? Oh, Debbie. Everyone's going to talk. It'll never happen, guys. We're anonymous. Post your pictures, post your questions. I saw you at the Quickie Mart, Debbie. Bad trade taken, lady. Just kidding. But it really is. When you make it silly like that, take a deep breath, right? That was me. That was me. Hoping you didn't recognize me in that bad trade that I posted. Guys, let it be fun. This should be the most unintimidating class in the world. And remember, you don't have to know how to build a clock to be able to tell time. You don't have to know anything other than patterns, right? When the stoplight turns red, you stop. You don't think about all the internal workings of that stoplight. You just stop because that's the pattern that keeps you safe. That's what your rules do. Guys, I'll be back in about 5 and we'll get into that second hour. Hopefully the S&P breaks out. We've got about 45 minutes until Powell speaks. That may be what breaks it out of its shell. I'll be back in a few, guys. Sorry about the little delay there. Had to save the world. You know how it is. Second hour. Here we go. Well, we're already 30 minutes into it. Look at that market trying to break out, right? Look at you guys with rules and advantages, and they're not present, and you're sitting on your hands and you're saying, you know what? I don't have to guess because I have a plan that provides me a statistical advantage. So, guys, I'm going to go through, and I want you to see this just because I'm going to scroll up to the top. I'm going to find the pictures that you guys have posted. We're going to talk about them, see what you've done, what you see, what you're thinking. And then we're just going to chit chat about it, right? We're going to talk about the pictures that you post and see if there's anything I can do to make your life better. Gary got us started today. Gary's recognizing that there is that termination condition, a little bit of overrun, right? And that termination condition has everything rolling. And Gary, I think that this is one of the greatest things. Gary's saying, man, I just want to pull back, but I want that pullback before the target is reached. This is a pre-trade picture, guys. This is the, hey, my situation is where it needs to be. My rules are met. My triggers are strong. My path is clear. All I need is an opportunity to enter the market. Gary, this is a great picture. I hope it came back and you made some money on it. We'll see what happened. John Novak posted a picture. And man, what's all this nonsense, right? Holy smokes, I have no idea. It looks like smalls through the area. It looks like a 50-50 trade with a little momentum right at a high volume area, and he makes money. Guys, it's a little unorthodox, the pictures he posts sometimes, because he's not just a high probability trend trader. He's 27 years deep into reading charts, right? All right, Safia, let's see what you did, my friend. So you broke rule number 2. I see it. Guys, do you see how easy it is to police yourself? And I don't ever revel in you guys making mistakes, but I'm thankful that you'll make them, and I'm thankful that you'll post them. Guys, this is a termination condition, right? And it's creating that full reversal, and it's providing odds favorable momentum. Smalls below the large are wide. But look how price reaches support and the trigger lines don't break through. Guys, this is textbook termination condition, and it's so important that you recognize that without a clear path, this market's likely to bounce. And that's exactly what it did. It bounced enough to take you out. Safia, are you with me in the classroom right now? Because one thing that you did write on your chart, and guys, this is why annotation is so key. Safia wrote gap theory. And this is cool because when you guys write something on the chart that isn't necessarily happening, this is our moment for clarity. So Safia, we're going to talk about the gap theory real quick. And I'm going to start at the beginning. For you guys that are brand new, if price pulls away from those large triggers on the 13.2, I'm going to change this picture to say the large triggers on the 13.2. Too fast and too far. Like they zip away, price cranks away, and then smacks into an area. It's very likely to close the gap back to the triggers. And you see it in something like this. Price accelerates away, hits that Fibonacci resistance. So in order for the gap theory, that closing the gap theory to be true, these large triggers need to be a full bar away. And you can use this reversal bar marker on the 13.2 chart to identify just how far away it is. So in this case, price accelerates away. The large triggers don't follow. There's room for an entire reversal bar before it hits the trigger lines. This is the gap theory. We anticipate price to snap back to those large triggers. Same thing here. Price accelerates. Large triggers stay a full bar away. We anticipate price to pull back and snap back to those triggers. And really, it's not telling you to take a short because price may snap back. It's saying don't try those longs yet. Let them sort themselves out. And then there's one more, right into Fibonacci resistance, the large triggers below. So Safia, on your picture, gap theory really isn't in place. And the reason I say that, and we'll tighten it up a little bit. The reason I say that is because you can see that contact was made with those trigger lines long before the reversal bar. Yeah. So it's not that the gap theory was in play. That didn't really affect it. But that termination condition ate your lunch. Absolutely. So when we do the gap theory, and let's see, maybe we have a large, let's see if we have an opportunity here on a, so there it is right there. Price accelerates away. So I'm talking from the top of this price bar, right? That's how high price got, 72.56. See how the large triggers didn't follow? See how you had room to create that full reversal bar all the way back to hit them? That is the gap theory perfect. And it doesn't say go short, but what it does say is that any long in between here and here is likely to get run over. Does that make sense? So yeah, a full bar. Yeah, and a full bar. Whoops, that's the wrong one. And guys, here's another example of questions for clarity and what it does. So when I identify a full bar, it's from the tail to the tip. So if there's room from the tip or from the tail all the way to make that full bar to the reversal bar marker, there's your gap theory, guys. And look at how much happens inside of that gap theory on that one bar. What it does is it tells you, I'm not looking for this long right here. I'm not looking for an opportunity to enter the market long because price may snap back to those triggers, and it certainly does. So I love it. It's more of a safeguard than a trade setup. But Safia, rule number 2, that's your weakness. That's your Achilles heel. Guys, when I started trading and I really got into it, that was my Achilles heel. I was the termination kid, so much so that every time I took a trade, pre-trade, I would take a picture and I would literally use my call out and I would have to write whether or not I'd reached a termination condition. And this is how I broke my habit. And I broke my habit as well because every time I filled out my spreadsheet, I began to recognize losers coinciding with trading and termination conditions. So the spreadsheet helps recognize those patterns, guys. And if you begin to recognize a pattern, jumping in early or trading into a termination condition, this fixed me, Safia. It may not fix you. You'll fix you. But guys, this kept me out of so many losing trades. Identifying what my challenge was and then verbally, or not verbally, I guess, but physically writing it out on the chart before I entered the trade. And what do we have now, guys? We have a termination condition that creates a full reversal, right? The smalls are beginning to accelerate below the large. They haven't yet. This isn't the best issue or the best look, but everything agrees. No, it has nothing to do with getting away from the mid-band range. So the way this works, great question. The way this works is your trigger lines, your trigger lines are moving averages, right? That's all they are. They're just moving averages. And then if price accelerates away from that average, it deviates that far, it typically comes back because it's an average. Just see pullbacks to the mid-band when far away. And that's, what's a mid-band? A mid-band's a moving average as well. So, and since the market is cyclical, you'll see it. You'll see the mid-band is just that. It's that middle moving average. So you'll see price come back to it. And that's one of the reasons that we use it as an area. But the mid band and the trigger lines, there's not really a relationship other than when a mid band on the 5-1 is inside, it may act as support or resistance. And that's what you'll see. It's just kind of, it's that bounce point. Yeah, just price from the large triggers. And it's the same phenomenon, isn't it? That gets us to our best entries. Because the same pattern here, price pulls away and returns, is the same thing. Price pulls away and returns to the large triggers. And man, if there's an area inside of those large triggers, creates an opportunity. This was kind of an epiphany for me. The same thing that keeps us from looking for the long is the same thing that gets us in at the absolute best spots. Pretty cool, right? I think it is. Whoa, there we go. Great question. All right, I'm going to scroll up. Who's next? Dun, 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 dun. Searching. All right, Folger, you said, where did I go wrong? You knew we'd get there, right? Whoops. Let's find out. Let's find out if there's something to fix. It's not a good top, right? So Folger, what's your first target? Not from a good top. The midband. No, your first target. If this doesn't, and then Rain, this goes back to, you see it pull back to the midband a lot. When a market is trending, when it's in that uptrend, and you get that bad top, and you hit it a little bit here, this midband becomes my first target, and that's it. But you're absolutely right. It hit the midband, but the large triggers are less than a bar away. You do have odds favorable momentum, right? The large triggers haven't quite made it through resistance, Folger. Can we agree on that? That 2250. So it's a 50-50 trade, right? 50% of your trigger lines have broken, but 50% haven't yet. And that's it. Bad top or bottom. Midband's the first target. Rain perfect. So we have a 50-50. And we have divergence on a 50-50. Folger. So we have a slight issue. It hasn't broken. And now we have another issue. We have divergence. And that's cool. I like the look. It's not a termination. You do have odds favorable. The triggers are coming down strong. You took an absolute rock star entry, didn't you? Right there at the area of resistance inside of favorable large triggers. Folger, I don't want you to feel bad about this entry at all. I think it's a good looking entry. I really do. I think that you nailed it. You followed the rules. It's beautiful. Where did the challenge come in? So let's take that medium probability trade, Folger. Your initial stop is up here, right? There it is, where the market shouldn't go. So when you get a reversal bar in the direction of the trade, especially on a 50-50, doesn't it make sense to reduce risk? So check this out, Folger. You were out at 23 even. You were in at 22. Your stop could have been right here at about 21-ish, maybe. You could have had maybe 4 or 5 ticks of risk on this medium probability trade into a midband from a bad top. Still a beautiful entry. And here's the flip side of it. If you were in at 22 flat, 18, that trouble spot, that's $100 worth of profit right there, isn't it? I think you took a great entry on a medium probability trade. I think that you just held it. Yeah, put it a tick above, right? So Folger, if you know that that's a trouble spot, Remember, just because we say, oh, I want to get 10 ticks, I want to get 10 ticks. What if 9 ticks makes more sense? What if a tick above support makes more sense? Is it okay to take 9 ticks? And I say this because a lot of people are black and white, but Mark, it says in the manual, take $100, take $100. Guys, take 90. We're here to get paid, right? Take 90. It's a trouble spot. It's a mid band. It's a bad top. Take 90. Get to break even. Doesn't it feel good to make $90? Doesn't it feel better to make 90 than it does to lose 300? So Folger, beautiful entry, great conditions. It was a medium probability trade that gave you an opportunity to manage out for virtually no loss, a couple ticks, and potentially a little bit of profit. Yeah, okay, and that's totally cool. But even though it's game over, so now you can go back though, right? If the scenario presents itself again, now you got that plan on the medium probability trade, and it goes back to if then. Guys, knowing what you're going to do in the situation. So if I go to that simple one, Folger, initial stop right on a 50-50, first contract target at the trouble spot, then go break even. So had you been in front of it looking at it, this is the one that turns that loser into a winner just because you recognize that it was a 50-50, because you identified your trouble spot, right? And that's just repetition. Great trade. So what did you do wrong, Folger? Can we say not a thing? It's just a management opportunity. The conditions were good. The advantages were present. Everything was good. So management becomes your opportunity. But great trades create manageable trades. The only thing I might ask, Folger, is that you study your entries enough to trust getting in on the way up rather than jumping in on the way down. That 2 ticks gets your first target hit, doesn't it? And gets you to break even. Yeah, so that's that trust piece, man. How do I develop trust? Oh my gosh, go stare at 200 pictures of perfect entries. It makes life easier. Great post, man. Great picture. A lot of great information there. Thank you for that. And trust is going to shake every now and then. Do you know when my trust gets shaken, Folger? And gosh, this sounds like such a Sunday school answer. I lose trust when I deviate from my plan, because every time I deviate from my plan, every time I stray from my checklist, every time I start trading on opinion or emotion, I don't have any sort of foundation to back it, right? I begin hoping that it works, not knowing that it works more than it doesn't, if that makes sense. And guys, you'll find this. You'll find that your worst days are the days that you deviate. The days that you struggle are the days that you deviate. The days that your confidence gets knocked out of whack are the days that you deviate. The high probability trend trade checklist has been proven by you guys to win more than it loses. Is there anyone in this room that isn't day trading to make money? Does anyone have something else, some sort of agenda? I'm doing it to make money, guys. I'm not going to lie. I want a gold medal. I want to make money. So why deviate from something that's been proven to win more than it loses, right? And Folger, amen. Go back to fundamentals, guys. Go back to the basics. Go back to what you know work. Stop worrying about being busy. Start worrying about being consistent. Great post, man. Thank you so much for that. Guys, this is why I love this classroom. There are lessons. I don't care where you are in your trading. There are lessons for everybody. Every scenario has some sort of lesson. But if you don't ever post, how are you going to get those lessons? Don't rely on Folger to post something, hoping that it covers what you wanted to see. Gary, let's see what you got, my friend. Gary, your 13.2 says down, your triggers say down, but it reached a termination condition. Termination condition. All your triggers are still down. You're looking for that HVA when the triggers roll. Gary, it's a good looking trade, taking advantage, letting the triggers roll before that first entry. I like it. Nice trade. You did have resistance right in front of you, right? And it just given divergence. But terminations, couple divergences, triggers roll. Not completely an HVA because you are on the wrong side of everything. But man, good look. That patience piece, Gary, outstanding. Letting your small charts telling you that the large charts may be rolling or that the trend may be changing. Good one, man. Good one, good one. And smart targets, right? Not hoping for a home run, being the first person after the market is railed down for an hour. Get in, get out, make your money. Safia, let's see what you did. Wow, look at this. Everything says up. Wow, Safia. Can we have a wow moment? And Alan, pay attention to this picture. Check this out. Everything says up, right? Clear path, strong trending market. Everything's railing. Nothing in the way. And Safia, it pulls back, right? You don't have the areas inside of the triggers. But everything says it's going up, guys. This is an amazing chart read. Letting those small triggers roll, letting the momentum get in your favor, and then Safia taking that little pull back to the areas when everything is now pointing up. This is nice. And it's 42.11, right? Isn't it that exact same area that we anticipate holding? And Safia, rather than jumping in and hoping, jumping in and hoping, jumping in and hoping, you let the momentum change direction. This isn't a momentum trade because your smalls are below the large, right? That's not a momentum trade. This is an area likely to hold and letting the small triggers get in favor and letting them line up in an area. It's a beautiful trade. But you don't have any momentum on your 13.2. Those small triggers are on the wrong side of the large. But this is beautiful. This is an area likely to hold, and this is letting momentum confirm it. And that shift from down to up. And then, I love this trade, Safia. This makes my heart happy. Anything can happen. No, not even. Right? Let's take a picture and talk. Here's your large triggers, right? Here's your small triggers. Miles below. You're in a downtrend. You don't have momentum, right? The only thing that you have is an area right here. Whoops, wrong one. So let me show you just how impressive this trade is. You have an area right here that lines up on your 13.2. 13.2 is strong trending. 13.2 says the market's likely to continue up. 13.2 says that this area right here has the potential to hold. Would you agree on all of that? 13.2 says all of that, right? And that's what made you want to go long. And the brilliance of this is that you could have entered here, but the small triggers are against you and it's not in an area. You could have entered here, but the small triggers against you, right? We're not inside of trigger lines. You might have tried to enter here, but the small triggers are still down. But you chose to enter. Unbelievable patience. You chose to enter when that little momentum indicator told you that now we're starting to go the correct direction. It's the exact same price as the first one, right? It's not the mid-band, Safia. It's the small triggers up. It's the areas up. It's the mid-band up. It's that confluence of areas right there where everything is finally pointing the direction of the trade. Does that make sense? This is beautiful. This patience is unbelievable. And this is the difference between getting run over 3 times hoping and at least giving yourself that fighting chance. Yeah, that smaller, faster chart danced all around it, right? Nothing agreed. And then finally it all agrees and you take advantage of it. That is patience to the next level. So great trade, great post. But the 13-2 led the way. Guys, don't forget that. And Alan, that's what I was talking about earlier. Make sure that the 13-2 leads the way. Make sure that the 13-2 tells you that it's time to go long. Was there a good bottom down at the bottom? Cool. Thank you, Safia. You didn't know that was going to turn into such a discussion, did you? Nice job. And then Gary. Same picture, right? You say now it's trading in a range. Wait for a breakout. Okay. Gary, I don't decide ranges on the 5-1. And let me just say this. I don't define a range on the 5-1. It's too slow of a chart, or it's too fast of a chart. All there is fluctuations, right? Let the 13-2 define a range. The 5-1 is just, it's an entry chart. It's just dancing around because price reacts at areas. Maybe use the phrase, just waiting for all charts to agree, right? I'm waiting for everything to say the same thing. Gary, strong trending market. It's a NASDAQ trade. You have odds favorable. You're on the wrong side of everything. You've had 2 divergences. It pulls back to the lower area. I'm trying to decide. It looks like you have Fibonacci support right there. Totally on the wrong side of the 13 range without momentum from a signal. I see why you did what you did. 21 range, 13 range. I'd like to see your rules for an edge trade before I can comment because there's so much going on. That one's difficult for me to understand exactly where your head was. Because my head says don't fight a 13 range and don't fight multiple divergences at resistance on the 8-2, but it's a strong trending, so you're looking for it. Pivot stop out. The 21 range supports it. So there's a couple conflictions there that I'm not 100% how you discern that it was time for a trade. I think I do. Support likely to hold. I can't tell if there's a fib there or not. It looks like there may be. So everything above, likely to hold, odds favorable. Here we go. This one does not support the trade at all. That's okay. Pivot stop out creates a pivot stop out that happens right at the area that you anticipate to hold based on the 21. Great chart read. And then taking profits at the trouble spot. There we go. I worked through it, didn't I? Nice one, Gary. I think that the 13 range doesn't agree. Why 2 range charts, especially when they conflict? This may go back to the conversation that we had like with Alan, right? Because if you're trading a 13 range, there's no trade here. You've had a reversal bar and nothing but down bars. But if you eliminate this one, all these charts agree, maybe there's a better plan. Great job, Gary. Good job. Great picture. And that's that same trade. Sorry, clicked on it twice. Carl, good morning. Carl, I love that you just jump in every now and then. Use the midband as a termination condition because of strong triggers on all charts and green background on all charts. Carl, can we talk about strong triggers real quick? And maybe this will help. This hopefully will keep you out of this. I'm going to take just this picture. I'm going to blow it up, make it super easy to see. So this was your trigger line on the, I hear you, Ron. This was your trigger line on the 13.2, right? And the smaller green, but the larger red and flat, right? So Carl, if we just go textbook, odds favorable momentum from the trigger line section, that's your look. That's your best of the best look, right? That's the one that says the market is screaming in the direction of the trend. So what you had is you did have small triggers head in that direction, but you also had not a lot of momentum. And then Carl, one other thing that I just noticed, see how price reached a divergence high and absolutely none of the trigger lines even came close? So we're looking at a termination condition as well. We've got a termination condition on the 13.2 in the form of a divergence high. You've got flat triggers, so there's really not odds favorable momentum. And Carl, this is a great indication on the 5-1. If your triggers are so flat that you can't even see an area inside of them, then they're definitely not favorable. And you just kind of got caught in a lifeless market. Yeah, does it make sense? Everything's green. I agree with that 100%. But there's no momentum really backing the trade, nor is there really an area inside of favorable large triggers. This is one where I think sitting on your hands would have paid dividends, or at least kept you from losing them. Rob, great question. How do you decipher what the divergence potential percentage is telling you? Are you ready, Rob? This is my favorite answer ever. And this is how it was explained to me. Divergence is like pregnancy. You either are or you're not, right? You're not a little pregnant. You're not 73% pregnant. You're either pregnant or you're not. Ron, these percentages show up. It is just part of the calculation process that goes on behind the scenes. When you think about divergence, and this is going to go, God, I'm going to take all of the work out of it for you. I'm going to show you what divergence is. I'm going to use the glossary of common terms. And all of this happens in the background. It's important that you understand that. Divergence is, and this negative number is a reflection of the percentage when you're comparing MACD DBBs to the measurement of the pivot and the comparison and all these things going on. Rob, it's like algebra to me, and it absolutely, positively kills me. I can't do it. But what I do know, no matter what the number is, it doesn't matter. Does not matter. If a negative number prints, whether it's 1 or 1 million, and this cyan divergence line prints, what it means for me is that there was a loss of momentum, right? And I can use this loss of momentum point as a potential termination condition. We saw it in Carl's picture, right? I can use that divergence, that loss of momentum point for termination conditions. I can do the same down here. And notice that this is negative 41, and it stopped it cold in its tracks, right? And this negative 10 may do the same thing. So don't worry about what the percentage is. If it prints, you had a loss of momentum on the 13.2. It creates a line to respect when price trades back to it and the triggers don't break. Does that make sense? It's almost too easy sometimes, guys. Yeah. I wanted to make something of it too, and John said stop. My brother told me, he goes, dude, just stop. It means that at this point, The sellers robbed the buyers of momentum and created a line in the sand. So when that point gets tested again, we're going to respect it because somebody that was able to stop the market already said that that was their number. Great question, Rob. It's those little things that I don't think about talking about because I've said them a million times. Guys, when you ask those great questions, it helps. It helps so much. All right, Gary, let's see what happened here. We had the beginning of the acceleration, right? You do have a clear path. Only one loss of momentum, and you take an entry at the area inside of favorable large triggers. Gary, you took the absolute best shot at a market that looked like it wanted to continue to the next area. It just didn't work out. I don't know that I would have left 15 ticks, $150 of risk on that trade. I think that if it goes beyond the window of opportunity, well, then it's no longer my trend trade, right? 30 would have been an appropriate stop. 5 ticks each, I believe. Yeah. How do you change instruments? Like a new workspace, Carl, or you want to change the instrument that's on, it's like going to July crude instead of June? And are you asking about NinjaTrader 8? Because Apex is just your funding company. NinjaTrader 8 is the platform. And in NinjaTrader 8, if you're trying to get to that new crude, just go up to the top where the instrument is and type in crude 0723. And it'll put you on that July contract. It's really that easy. On NinjaTrader 8, you're going to click on the box right there and you're just going to edit it. You're going to edit that 6 to a 7 and boom, you're done. It's that simple. Not like NinjaTrader 7 where you have to go through all the rigmarole of updating your instrument list and all that good stuff. Guys, there's one of those 50-50 trades, right? Divergence, 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 weak triggers. Hopefully none of you got suckered into the short there. 50-50 without a great look, right? Jose, guessing same trade as Gary, right? Everything's on its way down. Small's accelerating. Everything says down. You take the perfect entry. And so much risk, guys. So much risk. And the odd thing is that your risk is you were willing to put 13 ticks on each. But Jose, that 13th tick is just below resistance. Guys, if you're going to do that, you might as well be up here around 43, 44 and just bet that that's going to hold. Or have that 3 or 4 that's appropriate, right? And then if it doesn't work and it runs all the way up, you don't have to give away $300 worth of profit or $300 on the trade. And I know it's silly, but I'm going to go back to the rules real quick, and I'm going to go to the entries. And guys, I love to embrace rules. I love protective stop will go outside of the window of opportunity, below the 1-to-1s where the market shouldn't go, right? So guys, if you're looking at that picture, and I think that this is a great lesson, and let me know if you guys are comfortable with what I'm talking about right now. If we're defining the entry, right, the area where the market is likely to continue from the top of the triggers to the bottom of the triggers, and then tightening it up all the way to that point where the market is likely to continue. Guys, do you see how it's one line wide? Is everybody okay with this? That's your window of opportunity, isn't it? That's that point inside of favorable large triggers that countless, thousands of pictures have said this is where it's likely to continue. Thousands of pictures have said this is the best spot for entry. Guys, it's okay to put your stop outside of the window, right? Reduce that risk, because if it goes up here, aren't we outside of that window? And what this is, and not just for Jose, this is for all of us, because I think we've all done it. You're willing to put more risk on it because you hope that these areas outside of favorable large triggers hold, right? And then you hope that this bar was just a little bit of overrun beyond that area where hopefully it'll go from. And so is that one, and so is that one, and so is that one. And then, damn it, I'm going to get out because I've run out of hope. Does that make sense? Guys, this is common. It's okay. Put your stop where the market shouldn't go, outside of that window of opportunity. And if it overruns and does all that nonsense, let's see if there was a continuation entry. Not really. Just wasn't our trade, guys. You took the best shot. It didn't work. It worked its way down. It's okay to take losers. Everybody does. It's imperative that you don't compound them, right? All right, Paul, let's see what you did. Same trade, right? Divergence higher area, it did go jerks. Again, Paul, why so much risk? It was just 12 ticks. Cool. But it was 12 ticks way outside of that window of opportunity, right? And then Paul made the point that there was a signal from that higher point where if you do get run over here, you did get a signal, right? Did you get a signal with stranded buyers? It came from 07. On a 13 range you didn't. Did you get one on an 8 range? There you go. Beautiful, isn't it? Everything still says down, but divergence pushed it higher. Could have got you back in. Did you get back in on the signal? I like that. You could have used that, couldn't you? You were too pissed off at the jerks. Don't. They're just doing what they do, man. But here's the deal. Is the signal from up here? You have to ask yourself, is 39 likely to stop? Because the triggers are all the way down here from a bad bottom, right? Gap theory's almost in play there. Yeah, guys. You can add that later. Is it a high probability trend trade? So Paul, this is the one that's gonna upset you. Jose, this is the one that's gonna upset you. Do you have written in your plan? Do you have written in your plan that if my best shot fails, I trade from a different area outside of favorable large triggers against the trend on the 5-1, against the triggers on the 5-1, against not having odds favorable momentum on the 13-2? Do you have it in your plan that says if I get run over, I'll hope that a higher area prints because I got a market flow signal at it? Because doesn't, and then, man, here I go. And this is, guys, this is how you work through. You can build a plan that says it, but you need to, right? And we're using that market flow. The first thing that it tells you is that when your trend trade rules are true. So if your trend trade rules are no longer true, then what you're doing is you're creating a different trade. And it needs to be a trade that you have rules for. It needs to be a trade that you have pictures of. It needs to be a trade with repeatable conditions. You could, Jose. There's people that do it. There are people that trade range trade charts only. That's it. So don't try to be, right? And I think that's the point I'm making, guys, is you know how they put blinders on horses? You know how they put blinders on horses so they don't see all the other crap and they just focus on what they're doing? It's okay to do that with yourself, guys. It's okay to put some blinders on. It's okay to only focus on the absolute best. To master one thing before you try to master everything, right? To take one trade and do it really, really well before you add another trade. It's hard to do, guys, because we're all so hell-bent on being active. Be hell-bent on being successful. Be hell-bent on being profitable. Be hell-bent on winning more than you lose, right? And say to yourself, this is a 50-50 trade, and if divergence prints, well, it's not my trade. Let's see what happens. But my rules aren't met, because the only rules that I own on God's green earth are the ones that say, if a 50-50 trade has divergence, then there is no trade for me. And that's it, and be okay with it. Just be okay with it. And one day, it may be your trade, right? One day there may be factors that come into it that expand it. But if in the very beginning you give yourself the best chance of success, doesn't it make sense that you're going to become more confident? That if you're making money with one trade, it makes more sense to add a second trade. But if you can't make money with just one trade, why on earth are you trying to do it? Will it break? Hell, I don't know. Divergence, maybe it'll hold, maybe it'll break, maybe it won't, maybe things are giving you information. I love that. Will it break? I don't know. Accept that you don't know. Will the market go up? I don't know. Will the market go down? I don't know. Are my rules met? Nope, no trade. Are my rules met? Yep, pull the trigger no matter what your gut tells you. Because your rules should have already been established to win more than they lose. And nobody has that when you walk into Nexgen on day one. Guys, that's why I give it to you. That's why I give you a set of rules that have been proven and back-tested to win more than they lose, right? And none of you guys can sit on your hands long enough to just do one thing, which is okay. I'm the same way. And that's why I gave you the highest probability win percentage for a 50-50 trade, for that medium probability trade. And I even gave you a pretty clever way to management. It might work, Jose. It might. It might not. Only you can decide if you're willing to take that risk. And guys, you know how I say I recognize patterns in people? One of the biggest patterns that I recognize are you guys getting your butt kicked on 50-50 trades with divergence and taking them over and over and over again. It's like getting bit by the same dog over and over and over again. It may work. It is coming from a termination condition that creates a full reversal, right? It is screaming in the direction of the trade. The triggers are strong. You've got a small window of opportunity. We've been in a downtrend all day. So, Jose, there's factors that say that might have been worth taking a shot at. There's factors that say this may have been worth taking a shot at. But if it's not in your plan yet, check this out. Are you ready? Jose, if it's not in your plan yet, I want you to do this. I want you to take a picture of where you're coming from. I want you to identify the strength. I want you to create a scenario in your head that says, if I get in on this trade, right, this is where my stop has to be. If I get in on this trade and this divergence is true, I have to exit. This is how plans are built, guys. This is how you get outside of that most basic. You start back at square one. So, Jose, identify. But if you don't know how to read charts on the fly, you hoped and lost, right? There's a 50-50 with divergence. And it gave a little push because of the momentum. And check it out. It just kicked your ass. Consistency. Consistency, guys. Doing the same thing per your plan all the time. Sophia, trading into termination conditions. She loves termination conditions, right? Textbook, termination. Textbook termination, supporting the terminations. And Sophia, you took a shot at it and you made all sorts of money, right? Was it because of the good top? Was it because of, like, what made you decide to break rule number 2? You said that there were no termination conditions, but oh my gosh, that's a huge one. That's support and one-to-ones, right? And divergence on your 5-1 printed. And it's support here with absolutely no triggers through it. Was it the good top? Look at that. That great top that creates odds favorable. The great top that creates odds favorable. Sophia said, you know what? I'll take a shot at this one and I'll manage out of it. It's not a high probability trend trade, but it is beautiful execution with all of these advantages in place, guys. And that's all it is. Do you have a statistical advantage? But until you're being successful, simple, don't try to confuse it. Rain, you modified it to fit on one page. Nice. Thank you. I made mine bigger, Rain, only because I want you guys to be able to see it. And that's why I do the spacing, because I talk about it in sections, yeah. But what Rain just did there, guys, is perfect, right? You don't have to space it out. That's awesome to be on one page. And how cool is that? I like the way you put them right up next to it. That's nice. I might steal that. It's simple, right? Guys, that's 2 trades and 2 management plans on one page. Thanks, Rain. Gary, 50-50, 1 divergence. You wait for confirmation. Get you for a couple ticks, right? I'm a big fan, guys, on the 50-50. If you're going to take it, life is easier from the area. Confirmation costs a lot of money. Look at that. Hoping support holds, right? Going long against everything. I'm glad it didn't take all your money, Gary. No reason to fight triggers. Take many advantages. You don't like it. What don't you like, Jose? And that was Alan's. I think you just posted Alan's in there. Oh, you don't like waiting for confirmation? I don't either. There's situations where I will wait for confirmation. But I have got to have, I've got to have room, right? But look at this. This is 50-50 on a big 21.3 fib, which means that there's a pivot stop out happening at 21.3. Alan, do you see it? And it's 50-50 on a divergence low, and it's the same divergence low that killed you at a 21.3 fib, guys. That's a big honking pivot stop out. 2 areas not broken. Divergence. And Gary, this is one of those ones. You had enough reasons to get in at the area because it left you room if this one didn't work, right? And then on your 8 range, you just had a pivot stop out with an antenna bar and a breakout bar at the outer bands at a 50-50 at real key areas. So, guys, there's 50-50s to take, right? And there's 50-50s that maybe are better left alone. And you'll figure them out over time. And this one just pushed up, right? Divergences on a 50-50 pushes up. And then Alan, if everything had still said down and everything supported more short, there's that continuation look. I don't like it from the wrong side of the large triggers personally, but that's just me. Guys, good stuff today. Really good stuff today. And then here's your S&P shenanigans, right? Weak triggers, and I'll be darned, it pushes higher. Wrong side of the triggers, and it's pushing higher. Just waiting for advantages. And that's not a rule, Alan. That's just something that I've noticed. It tends to be advantageous when I'm on the correct side of things. I don't need to give myself more stuff to fight. It doesn't do me any good. It is active. It's moving a lot, isn't it, Jose? And guys, would you guys agree that if you're following rules, there's not a whole lot to do today? But the flip side is if all you're doing is following rules, it probably kept you out of some trouble, right? This Monday, yes. Are you thinking about Memorial Day? Is it Memorial Day, the 29th? What day is that? Monday the 29th is Memorial Day. Oh, Victoria Day in Canada? Yeah, because they're American markets, and we are such an egotistical group of people, right? We don't care about your holidays, Jose. Boxing Day means nothing to us, too. So I don't think Victoria Day is going to affect the American markets. But the following weekend, yeah, Memorial Day on the 29th. I'm pretty sure the markets are closed that day. I hope so, because I have a trip planned to Austin that day. If not, I'm going to beg and plead John Novak to come teach you guys. But let's see, market calendar, Memorial Day 2023. The answer is no. All stock and bond markets will be closed. So on the CME, when we go to that schedule for Memorial Day, Memorial Day. Google's great, isn't it? Monday, May 29th. It'll reopen. I guess it opens at 5 p.m. that day. So class will be over long before it opens up. And then Tuesday, they'll get back to regular hours. Sorry, guys, you're going to have to go enjoy a long weekend. Ninja Trader 8, Ziba? Indy, oh, right on. It's your birthday weekend. Do you have big plans? I hope so. I have to figure out where it's at. Ziba, we're talking about Ninja Trader 8, correct? Okay. Huh. There we go. Build new charts. All right, so Ziba, new chart. Got it? That's the start of it. That's going to set you up and bring you to this. You need to make sure that you pick the tool that you want. And this is a good one. Build a couple of them. Get good at it. What size chart are you trying to build, Ziba? And did you accidentally close out? Is that why you're trying to build it? Because I may have an easier solution for you. You want an 8 range? You accidentally closed it out. So Ziba, even easier to do is go to File Workspace and close it out. And when it asks you if you want to save the changes, just say no. And then reopen it, and that 8 range will magically reappear. That's even easier than building a chart, I think. Because that'll nullify the change of you deleting it. Oh, you accidentally saved it? Cool. Then you're going to go File, New Chart. You're going to put your 8 range chart template up here. You have to make sure that the type is range. This is actually a range chart. This is perfect for you. This picture are your settings. So that's actually everything that you need to put in there. You're welcome. Guys, that's a good skill to have, right? Go through and do this a couple times. Get good at it. Look at that. They kept trying to bang their head on resistance, didn't they? Tried to push, bad bottom. Oh, resistance gap theory. Bad bottom, right to resistance 1-to-1s. And now everything's starting to agree a little bit. But we've got that pesky pivot stop out, or that pesky divergence low. So what has to happen, guys? What are we looking for? In order to have the rules met for a medium probability trade, the small triggers must break through this divergence low with odds favorable momentum. If it does, and the conditions are perfect on the 5-1, no divergence, right? Small window of opportunity, strong triggers, you may take a shot. So right now, there's divergence potential. See that number flashing? If I'm thinking to myself, if there's no divergence, I'm taking a shot, guys, I'm locked and loaded already. I've done everything that I need to do, right? And now I have to adjust a little bit because that mid-band keeps coming down. I have one line inside of favorable large triggers. I have odds favorable momentum. I have a 50-50 on the 4207 area. And I'm coming from a termination condition that creates a full reversal, that gives me odds favorable momentum, that provides me with a clear path other than 4207, which hasn't broken yet, but it has the potential with odds favorable momentum. I have one line inside of favorable large triggers, and I can use Fibonacci to create a target, right? Not a termination, but a target. So the only thing that I'm watching if I'm trading that super simple plan is whether or not divergence prints, right? If divergence prints, I cancel my order until these large triggers break through all the way. And at this point, guys, I'm looking for a high probability trend trade. I'm looking for an odds favorable, no termination. Where's my lowest point of resistance inside of favorable large triggers? My rules are met. I'm obligated to take this trade because of the advantages present. Give me a Y in the room if you're with me. Do you see how we did that? A lot changed over a couple seconds, didn't it? But it didn't change the criteria. There was no opinion. I have odds favorable momentum. There's no opinion. I have a clear path. And I have an area inside of favorable large triggers. Guys, let's build a box. From the bottom of the triggers to the top of the triggers, right? From the highest point of resistance to the lowest point of resistance is that area where the market is likely to continue. Guys, give me a Y in the room if you see it. Your chart shows blue fib. You guys have big blue fibs, huh? So what does that mean for you if you have a big blue fib right here? It's a tick off, but it's close. It's a termination condition. Maybe I need to rebuild my workspaces, right? Maybe my workspaces are corrupt. Two of you have it. Tony doesn't have it. Folger, you are on Eastern. Did you clean out your data this morning? Did you get rid of tick? You got rid of cash? Cool. So you did that. Try this. Do me a favor, Folger. I want to see something because this helped once. Go to Tools and go to Options and go to Data. And make sure that it says Do Not Merge. Because sometimes when you don't agree with me, you don't have it. It says maybe merge back adjusted, merge non-back adjusted. Make sure that it says do not merge. Cool. One thing you can try is you can disconnect and reset and repair the database. But guys, there's conflicting, right? Maybe one corrupt tick somewhere. And those sons of guns didn't get us, did they? It might be me. We haven't reached it yet, guys. We're a tick off once again. We still have... remember when I was trying to build that midband the other day? There it is. So Zeba, what you did... So show me a picture of your settings. Zeba, right-click and show me your settings. And let's see if we can figure it out. But what you probably need to do is you need to right-click and go to Templates. And chances are what you did is you hit 8.2 Rinko when you should have hit 8 range market flow. Try that. Make sure that it's the market flow template, because right now there's not market flow bars on it. Termination conditions, guys. I hope nobody has longs in there. This is crude oil. Looks darn near the same, doesn't it? Bad bottom, straight to the mid band, continues down. Tail into momentum, pulls right back to resistance inside of favorable large triggers. That's kind of cool. Not 100% best momentum, but those smalls are outside, right? There's a clear path. Everything says go. Thank goodness for a random one-to-one to give a bounce right back to a mid-band at the large triggers, right? If you took this trade at 54, guys, you've already made $100. It's in the bank. You're happy as can be. You have zero risk. And if this market decides to continue on to that 71.30 fib, money all day. But since not having the best momentum might be your one disadvantage, your one small issue, if divergence prints, right? If you get a second higher divergence, smalls inside the large, maybe you don't hope and pray that it keeps going down. Maybe you start to protect yourself a little bit. But if it never materializes, guys, let's use Fibonacci for targets. Is anyone going to show me a short there? Hope so. I'd love to see that picture. Guys, I'm going to take just a minute. I'm going to come back. When I get to the classroom, when I come back, wow, look at that. It made it to Fibonacci. Is it fun when I sound surprised? That should do it. So click load and tell me how it works, Zeba. All right, so do me a favor. Right-click on your chart and don't show me your templates. Right-click on your chart and show me your indicator settings. Nice one, Bobby. Quick profits, right? Easy 100. What got you out here? Just curious. And guys, you can always tell me none of your darn business, Mark. Great top, strong triggers, one divert. Oh, look at you. You caught it up here because of the great top. Got in, quick profits, managed way too tight, way too emotional. Paul, why were you emotional? Was it because the triggers didn't break through that potential pivot stop out yet? That'll do it sometimes. When I know I'm breaking rules a little bit, I love this trade. I get a little nervous, but man, if you're going to identify the trouble spot with this much momentum, guys, you got to be willing to to stick it out a little bit. Does anyone ever read Sun Tzu, The Art of War? You got nervous, moved it away from the one-to-ones. What got you nervous, Bobby? Just didn't want to give the money back? Which is okay. Too many losses. Fair enough. Was it too many losses from following the rules? That's what got you? No? Was it too many losses from breaking the rules, Bobby? Gosh, sorry, I'm kind of being a jerk here. But this is a great lesson, right? And this is that trust piece. Jerk. Love it. But guys, I get nervous too when I break my rules. I get anxious too when I break my rules. I manage too tight when I break my rules, right? How could I not? I know I'm breaking my rules. Beautiful. Beautiful, Jose. On the chart, oh, right click right here, Jose. Go to properties. And when you come down to the bottom, it'll say display P&L and you'll just have to check it. And you will, Bobby. You'll make it back. Don't build your confidence with winners because you're going to lose trades. Build your confidence by taking the right trades and let the trust, knowing that your winners win more than they lose, right? Knowing that that high probability scenario gives you the best chance of success. Let that be your trust. Let that get your confidence back. Awesome, Jose. Ziva, it just looks weird. Okay, so you're not showing me much, though. Oh, because that's indicators. I'm sorry. Ziba, data, not indicators. Sorry, that was my bad. I wasn't clear. Ziba, right-click, go to Data Series. These are your settings, but what it's going to do, it's going to let me know whether you're on a range bar or a Nexgen Dynamic Renko bar. And right now, you're on a Nexgen Dynamic Renko bar. So this has to be a range bar. And in order to do that, you click on it and click that range bar. Good stuff, guys. Went right to the fibs, didn't it? So, Bobby, what I always ask myself is when I start getting nervous, this is my key phrase that helps me, is what changed? And watch how this works. You ready? This worked for me a lot. All right, you entered the trade, and you get a reversal bar, and your stop is right here, right? Your first target is at 44, and it got hit, and you go to break even. So, Bobby, what's changed? My smalls are still outside of the large, right? I still haven't reached the area. I still have momentum. I still have a clear path. And the market continues down, right? And I start getting close. What's changed? Now my smalls are rolling in the direction. They're still below the large triggers. Everything says go, right? Everything on every chart still suggests that the market's going to continue down. And it takes a while, Bobby, and it takes trust for me. So now we've reached the one-to-ones. What's changed? Absolutely nothing, right? And now we're a tick or two beyond the one-to-ones, and now even my smalls are in the direction of the trade. Now I can't find a darn reason to do anything. And at this point, Bobby, you're 3 ticks away, right? You're 3 ticks away from a $200 target. And if you wanted to, you're like, man, I don't want to give it back. Here's a little fluctuation where the buyers tried, but nothing happened. Lock in 50 or 60, right? Lock in 50. Oh, thank you, Vad. Oh, thank you. See, my brain didn't click over to that. Zeba, he got you. Make sure that tick replay is checked. Vad, you came out of the win. See right here, Zeba? Vad came storming in from out of the shadows and saved me because I'm not a tech guy. Click it, and that should fix it. Thank you, Vad. So, Bobby, when you have those trades where you manage out prematurely, right? Go back and do this. What changed? Ask that ever important question. What changed? What about my charts makes me feel that I need to move my stops? What about my charts makes me feel that I need to do something like that? And then, so Bobby, hypothetically, as we get back to those one-to-ones, if there's divergence potential, if that number is flashing but it's not there, put your stop 2 ticks above the reversal bar marker. Because then if divergence is true, and that's an exit condition, it helps you out a little bit. And I only know this lesson so well because I was the king of taking 20 trades in a day and being up 18 ticks because I would manage out too soon, because I'd start to get nervous, because maybe I lost the previous trade. Management's the second half of what we do, guys. The first bite of eating that elephant that is day trading is just getting those entries, right? Yeah, it is. It's exhausting. Guys, nailing those entries is the first step. That's what we do first. And how do you get graded entries, guys? Post pictures of your trades in class. Post pictures of your entries every day. Win, lose, or draw. Post the trades. If you win and the rules are wrong, you may have a short-term victory, but a long-term failure. And who wants that, right? We want to be in this forever. How will you know the difference? You need feedback, guys. I am the nicest guy you're ever going to meet when it comes to feedback. I don't want to trample your feelings, but I will be direct, especially if you don't take my feedback. David AZ, absolutely. I know those jobs get in the way, don't they? David, I'll make sure that John has it set to go public. And if you ever notice that it's not there, do me a favor. Just reach out to your salesman, reach out to John Novak and go, hey, the video's not public, and I'd really like to see it. Or reach out to me and I'll reach out to John Novak. I'll make his phone ring. Because sometimes it doesn't go public because we don't make it accessible during the classroom anymore, because we want you guys in here asking questions and learning. So I'll make sure that it happens for you. And then, guys, management, right? Management comes after entries. Great entries create awesome management. Thank you for that, David. I appreciate it. We're passionate about what we do. We love it. We really do. Gary, posting a picture. I bet you it's waiting for an HVA trade. Let's see if I'm right. Termination, triggers rolling. That's not your HVA, right? Your HVA is down here at those large triggers up and strong. Gary, this was a great lesson that I had to learn. Your HVAs come from pretty close to the termination. At this point, you're looking for a trend trade. In this HVA, maybe if you took a momentum trade, but you don't have any areas to take it from. The next trade in this scenario is from somewhere around 96 at an area inside of favorable large triggers. Does that make sense? That was your HVA right there at 95, done and over. This one's not really offering any help. Cool. Good picture, man. And then Paul, bum, 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 bum. You said signal coming from the HVA at the small triggers up strong after a termination condition. Nice trade, Paul. You didn't even wait for the signal. It was just still going. So the signal just made you feel better, right? But isn't that a rules, Matt? Beautiful termination. That's a great long. Clear as day. And isn't it awesome when it lines up with one-to-ones too? With no divergence? Ah. You don't have to be first, guys. Take the best. That's it. Beautiful trade, Paul. Nice job. I forgive you for that tight management from earlier. We're cool again, man. Here's crude. Termination condition creates a full reversal. Full reversal gives odds favorable momentum. Odds favorable momentum gives me a 50-50 scenario. 7160 has not broken. It's a 50-50 from a great bottom, guys, and there's the top of my window right here. If divergence prints, my rules aren't met. If divergence does not print, my window of opportunity is that big. What's your plan say about it? Guys, if you're not sure, take a picture. Start writing your rules on the chart. See what your plan says about it. All right, Safia, breaking every rule known to man with the shorts, because why not? And then everything rolls, and that's your HVA trade. Why the short, Safia? No momentum, multiple divergences, weak triggers, no area inside. And you notice how you didn't post that one? You went straight to this one that won because that one feels better. Sure hope Mark doesn't notice that I broke every rule that Oh, I know it's the second one. This is the one you were hoping I would look at, right? Does this one fit your rules? What type of trade is it? It can't be a medium probability trend trade because it's not coming from an area inside of favorable large triggers, right? It's a momentum style trade coming from a good bottom. It's a beautiful execution once again, but don't use checklists for a trend trade if it's not, because it doesn't make sense, right? Because this is a termination condition at 98. Price reached resistance, absolutely no trigger lines break through. If you're looking at this from a trend trade set of eyes, you absolutely butchered the process. But if you're looking at it from a momentum style trade where you had a termination and the smalls are strong and everything's rolling and you get a no divergence pullback to a mid-band and one-to-ones, that's beautiful execution. What a great trade right up to the trouble spot. Do you see the difference? And Safia, the only reason I point this out is because it's important to know what you're doing so you know whether or not it's repeatable. I don't see 21.3 on your checklist, right? And the 21.3 was not strong. The 21.3 still said everything was going down below the areas at 94. Wouldn't you agree? The small triggers hadn't even turned yet. Smalls and most of the large were through 94. No, don't be sorry. But that little bit of clarity, right? Your brain's always going to tell you exactly what your trigger finger needs to hear to get into the trade. It was complete overrun on the fibs. It's a termination condition, right? That's not the best looking bottom. There's still a good chance that this area may hold, especially with everything down here as well. You took a great opportunity to take advantage of the short move between trouble areas, and it's set up beautifully for you. I like the trade. I'm not knocking the trade at all. I just think it's pretty cool. Know what did it, right? Know why it worked so that you can go back and study it and make sure that you're good. And then there's that 50. Nope, that's clear path from a termination. It's not a 50-50. All yeses. Who was this? Bobby? Bobby, are you suggesting that with odds favorable momentum and absolutely nothing in the way, you'll take a pullback to an area of support inside of favorable large triggers, especially after a strong bottom? It's crazy talk, Bobby. Aha. You guys are in cahoots. Well, that's the same look, isn't it? Gary getting on the wrong side of that mid band, getting below that area of support. Careful. Nice job. Jose trades. Jose taking momentum trade that pulled back 71.45. What if, Paul? I like it, Jose. It's a little unorthodox, but it's a solid trade coming from the termination condition. Just that little no divergence pull back to the mid band right at the small triggers. Solid. Great look. Same look coming from Folger. Love it, guys. It went without you. Happens sometimes. It does. So, Safia, it doesn't. See how none of the trigger lines break through? This is your best look, Safia. 100%. This is your best look. This was overrun a little bit. Not 100% the best look. It's still a great look. But it's a little bit of overrun. Yeah. Best look, no triggers go through, but this is solid. That's pretty much saying nothing went. Folger, you said you went without you. Michelle, 2 divergences pulls you out of a high probability trend trade. Rain, divergence helps. What do you mean? Are you suggesting that a slowdown on the 5-1 may get you back to that best area? So, Michelle, talk yourself through it. And your plan is your plan, right? Do you still have odds favorable momentum? Do you still have no termination conditions? Do you still have an area inside of favorable large triggers? What part of your checklist hasn't been met? There's no termination condition on the 5-1, is there? Do your rules say 2 divergence means no trade? If it does, don't take the trade. But if you don't have anywhere written out that 2 divergences on the highest, best looking probability trend trade in the world, if you don't have it on there, aren't you contractually obligated to take your trade? Whoa, what happened there? Look at that. It didn't get me, and it spiked. So, Michelle, 2 divergences isn't a killer, is it? Just didn't get filled. What about 4 divergences and weak triggers? That changes the scenario a little bit, doesn't it? Do you see how that works, Michelle? If you're going to use the 5-1 for terminations, make sure it's a real termination. Trust in the rules, guys. Consistency in the rules. Great observation, Michelle. Thank you for sharing that. And then Bobby says, nothing's really changed. So he's going to try and take it, even though he's had multiple divergences in the same area. Bobby, does this one fit your plan? Weak triggers, 4 divergences on the 5-1? It might. I don't know. It could. If it does, awesome. It's not a 50-50, but is it not 4 divergences in the same location? And that's okay. I'm only asking, guys, I'm checklist Johnny here. I am 100%, if I'm following a high probability trend trade rules, and my rules say don't turn into a termination condition, and every day that guy talks about three divergences in the same location may terminate the trend. It's cool if you gave away the advantage of a clear path, right? Does that make sense, Bobby? It's not a 50-50, but it's still 4 divergences in the same general location. There's another one, and it's lower, and we're kind of getting what we anticipated. So now, if you were looking for that continuation for that second shot, trigger lines have to roll, right? Smalls have to roll, have to start heading back up, have to get that good look. And if it never happens, it keeps you out of this potential loser. You have a 5-1 fib at the 4th divergence, so one more thing to look at there for sure. And Jose, you caught it. Beautiful. Everything says up, hadn't reached it. Perfect entry, a tick or two above. Straight in. Jose, what a great trade, man. Nice job. 2 hadn't printed when you got in. Let me find your picture, Bobby. Hold on. You're telling me that these 2 divergences hadn't... Where did you get... Oh, you're in way over here. No, you're in right here. So you're saying that this 3rd and 4th divergence hadn't yet printed on your chart when you got in right here? Way below the areas inside of... Do you see what I'm saying? I could be reading something wrong, and I never discount that. So you were already in this trade from over here? Oh, so you had... I got you. So you had it lined up and you never canceled your order. Got you. See, that makes more sense, Bobby. You could have led with that. Yeah, it moved fast. But no worries, because it really created a great conversation, didn't it? Cool. And now we don't have odds favorable anymore, guys. And that's it. We made it to noon. Nice job, everybody. That's the week. What a great week. I hope you learned something. Rob K., how are you doing, man? Guys, I see these new names, and I know that you like to be quiet. You're doing all right? Cool. Rob, my email works. If you have a question, if you need something, let me know. I'm not at my computer a lot on the weekends, but I am available for you guys. I won't stop my good time to do stuff, but I will definitely, if I'm in front of the computer and you email me and you need a little help, I'm going to get you that help. Guys, enjoy your weekend. Study, do a little market replay. It is 64 and sunny here. I'm going to enjoy it. I will see you guys Monday morning, bright and early, guys. Going out on a good note. Nice job, Bobby. Great day. Consistency, brother. Day in and day out, man. I'll see you guys on Monday. Take care, everybody.